My name's Peter Chega, Head of Product Development and Innovations at AIB Access Africa. So today we are going to see how to select good stocks, and we'll use some of the reports that are shared by our research team to identify how now you can do it on your side. So let's first start for the interest of those who don't know NSE. NSE is an open air market. It's like an open air market, the same way you go to market to buy goods. But here you are buying shares. You buy shares for a listed company. So the way it works, a company wants to raise capital, maybe to do a project. They go to NSE, they are listed through IPO. So most of the investors will come in and buy shares for the first time when it is listed through the IPO. After IPO ends, those shares now are listed on a main trading system so that if you want your money back and you're an existing shareholder and somebody else wants the shares, you sell the shares to them, they pay you. So the company doesn't liquidate the money that you give them. So somebody else will come and buy your shares, your shareholding, then they give you the money. That is done by the broker. So that's how the market works. Company needs capital. They come and raise it through IPO or through listing. You buy shares for the first time as a public. You have given your money to the company. You may need your money back. You can't request the company to pay you. So that's where now NSE comes in. You list the shares you want to sell, somebody else comes and buy. And that's what you see on our digital platform, the bids and ask. Bids are the people who are buying. Ask are people who want to sell their shareholding. Maybe they need their money urgently, or they have made enough gains. They want to sell and maybe buy another counter or same counter when price comes down. So that's how NSE works. Your shares, they are held in CDSE. So when you buy shares at NSE, they are held at CDSE. So then what do you need when you want to buy shares? You need a CDSE account. So that CDSE account is opened by the broker. So when you go to the broker, they will request your KYC details. For AIB, we are digital. You don't need to come to us from our online portal or mobile app. We just got to open new trading account and not sign up. It's not sign up. You got to open new trading account. So on the app, when you get the first screen, you click skip. You go to the next screen. You click open new trading account. Submit your KYC details. We will open two accounts. One is an internal broker account. The other one is the CDSE account. Internal broker account. So when you pay money to the broker, they credit that account and you can see your credit data. So at that point, the broker has your money in their bank account or M-Pesa, depending on where you paid. Broker will go ahead and open a CDSE account at CDSE. So you have two accounts. One on the broker side to hold your cash, CDSE. Then one account you want to buy shares. Companies list at NSE. That's how trading happens. So somebody who have the shares at CDSE will provide them for sale at NSE through the broker. So the broker will submit a sale order. Then you, as the person who want to buy, you will submit an order through the broker to NSE to buy. If you match the price of a seller, you get the shares. Or if the seller matches your price, you get the shares. And that's where market depth comes in. Today, I don't want to go through market depth, but we'll go through it next time. Maybe at the end, if I have enough time during Q&A, I'll go through the market depth. But the way it works, as a seller, you have your own price. As a buyer, you have your own price. We place our order. If I want shares immediately, then I would need to match a seller's price. That is the top price on the ask side. If it is the seller and they need their money urgently, they will need to sell to a willing buyer. So they would match the buying side. However, you can put any other price, but you have to wait for prices to come down. Some are not guaranteed. Some you can get either within the day or within the duration you put your order when you put GTD, good till date. We will come to that. So that is the trading. So broker, NSE, CDSE. Broker is the one who handles the transactions on your behalf, opening account, receiving money, submitting order, and settlement. T+3. Broker is the one to pay CDSE, to pay the other counterparty, but the whole process is automated. So there comes in the listed company. When you buy, you become a shareholder. If company does well and they make profit, they share dividend with you. That is that dividend profit they make, they share portion with you. That is paid directly to you in form of cash or bonus shares. You are given additional free shares. The value of your shares doesn't change. Remember, the value is pegged to the price. So if it is dividend in form of cash, it will be sent to the details that you gave. If you gave M-Pesa when opening account, you receive it in your M-Pesa. If it is a bank, you receive it through the bank. And companies declare dividends at different seasons. There are those that give first and final. There are those that give interim, then final. So those are 2 dividends. Then there are those who give even a special dividend 3. And there are those who give bonus shares. You find you're getting free shares and also free cash. Remember, you have not sold your shares. So that's one way you can make money at NSE, through dividend paying stocks. When prices go up, as I've said previously, you can decide to sell, to take up the profit. So the difference between the price you bought at and the price you're selling is the profit. So that's another way now you make money at NSE. So either by selling when prices go up or by collecting dividend. You just buy and hold shares for long term. So that dividend is paid directly to you by the registrar of that company. Each company has its own registrar who handles the matters of shareholders. They are the ones who manage the shareholders. AGMs, dividends, any corporate actions, they are the ones who handle. Now, for you to be protected in the market, there needs to be an independent party that regulates the market. That's where Capital Markets Authority comes in, CMA. They regulate broker, NSE, CDSE registrars, and the listed companies, so that you as an investor, you can't lose your money. If broker violates trading rules, then CMA is the arbitrator, is the court for NSE. So if you have any issue with your shares, always go to CMA. They are the ones who arbitrate. If there is any court case, they are the ones to handle. If there is money to be paid by broker to you, they are the ones to instruct. So CMA oversights the market, and they are independent of any interference, including political interference. For them, they are independent. NSE, however, they also regulate trading. They make sure you are getting the right prices. That's why there is 10% rule. They also do daily audits on trading to make sure the brokers, because we are the ones submitting orders on your behalf, doesn't violate trading rules. And they don't use insider information to their own advantage. That's where, if there is any insider information, every listed company is supposed to put to the public. And brokers are supposed to share that through whatever means they share their reports with their clients. So that is the role of NSE. CDSE, they also do audits for accounts to make sure your account, one, broker does not edit in their favor. That is, they don't allow fraud. Also, they check your shareholding to make sure broker doesn't oversell, because that is against the trading rules. So that is the role of CDS. So CMA oversight the whole market. CDSE, they oversight your CDSE account. NSE, they overlook the trading. And of course, now we have the government through Ministry of Finance. They are the ones who, I think today, currently it's called Treasury. They are the ones who now oversight the whole market. They make sure brokers follow the approved regulations by the parliament. But CMA is the final say. They are the ones who regulate the market. I hope that is clear now, NSE, how it works. When you buy shares, you are becoming a shareholder of that company. You own part of a company. If you buy KCB, you become a part owner. If you buy Safaricom, you become a part owner. If that company does well, you get benefits through price appreciation, because when a company does well, you also expect the prices to do well in NSE. And also, if they decide to give dividends, if it is a dividend paying company, they will share that with you. If it is a growth company, then that dividend, that profit they would have shared with you, they reinvest. That's where now growth company comes in. So dividend companies, those are the companies that pay dividends. Growth are the ones who don't pay dividend, but they invest that profit for growth, and their share price, you find it appreciates a lot. They are also a mix of dividend and growth stocks. Like Safaricom is a mix of both. They give part of their dividend to you, but majority of the profit they reinvest for growth, and that's why you see their prices keeps on appreciating. So I hope that is clear. So think of NSE like Gikoba for shares, where you have buyers and sellers where you meet and you transact daily between 9 a.m. and 3 p.m. That's when the market is when. So market opens between 9 a.m. and 3 p.m. After 3, it is closed until the following working day, 9 a.m. Now, between 9 and 9:30 is called pre-open. That is the time you submit your orders, but there are no executions. Limit orders. Limit is the orders with the price. Then from at 9:30, it's called auction. That's when the first executions happen, and they form the opening price for that day. And now you are subjected 10% up and below that price. Buyers, it is below. Sellers, it's above. So I hope it is clear on NSE. Let me maybe I'll take questions at the end. Do you have a slide for this? We are taking notes, but some information are too fast. I'll share the notes, don't worry. I'll share the notes in the video. For those who have not joined, there is a Telegram channel, a WhatsApp channel, and also a new community. Let me share those links. That's why I will share the videos. So you don't need to worry about the notes. You just follow the presentation. I'll share everything with you. I'm also working on a blog where I usually do blog posts. Let me share the link for community. And all these, the community and the Telegram channel and WhatsApp channel, you are protected. Your number is not visible to anyone. That's why it is not a group. In a group, anyone can see your number. I don't want to expose you to other people. Can you hear me now, Enoch? Just confirm. Confirm. I'm just sharing the links. Those who have not joined, you have an option of joining the community or following the channel. Remember, for community, you get notifications on your WhatsApp. Maybe you don't want notifications, you can follow the channel. I managed to restore the channel. Let me share a link for our research groups, because there you can also get the link for Telegram, my Telegram channel. So for those who have not joined, you can join again. So let me go back to the timing, because I can see there is a question on the market timing. Market opens at 9 p.m. That's when NSE opens the market, 9 a.m. During that time, you notice our system says pre-open. Pre-open. That goes all the way to 9:30. That time, there are no executions. That time, there are no executions during pre-open. It's just orders which are submitted. Limit orders. That is orders with prices between 9 and 9:30. Exactly 9:30, these orders you have submitted during pre-open, if there is a matching buy and sell, the first trade happens. So the first person who placed an order for buy, the person who placed the first order for sale, if they match, they form the opening price. So that opening price is what you are subjected the whole day, 10% above for the people who are selling. So you can put the orders from that price up to 10% up. For the buying side, you can put from that price downwards 10%. Now, between 9:30 and 3 p.m., it's called open. You see on the system, on the app and portal, the word open, green. It means you are trading in live market. Orders you are submitting directly to the market. Then 3 p.m. market closes all the way to the next working day, 9 a.m. However, on our side, between 8:30 and 9, you find the system is pre-trading. That time we are connecting to NSE. You can still submit the orders, but they'll go to off market. Then they'll be submitted the first thing at 9 by our team. So active trading, 9:30 to 3 p.m. That is by NSE trading rules. So we have gone through the introduction. For those who are just joining, I was just going through the introduction of NSE, where you buy shares of a company and you become a shareholder. That is listed companies trading on the main market. Main market is the market that you see the prices on the portal and app. You understand how the market works. The next thing is which stocks to buy. You need a good stock in your portfolio that either is giving you dividend, free cash to you when the company declare that, or bonus shares, which is additional shares which you don't incur cost, or have a growth. Growth means your value of shares keeps on changing. If you go to the app, there is the invested value. That is a cost you have incurred to buy shares. There is the market value. I'm talking now about market value, a company that is growing that value. That is, if you compare your invested value against the market value, you are on positive position, which is called profit level. So wherever your market value goes above the invested value, you are on a profit-making position. If you are to sell, you can realize that profit. And only if you sell. Remember, if market goes down, you might also go at a loss position, but you have not sold. Market, when it rises up, you might find again you're back in a profit position. So if you're buying shares to make money through capital gains, that's where then now portfolio valuation comes in. When market value goes above invested value, that time you can sell, take up the profit, buy another share that is below price. But then remember their cost to cater for. Age group between 1 year, actually when you receive a birth certificate, because you can open an account for minor, all the way to 40 years, they can play around with capital gains because they have time and risk appetite is high. If they lose money, you know, for them, they still have time to recover. Between when you receive birth certificate and 40 years, you can play with capital gains where you buy and sell. From 40 years and above, you are thinking about retirement. Even in your retirement, you are thinking how shares will give you free money. There you go for dividend stocks. So between birth certificate to 40 years, that time you can consider growth stocks, but also the stocks that are giving dividends, so that you can reinvest this dividend. From 40 years and above, start thinking about retirement. What will be giving you that free cash without selling is dividend paying stocks. That time, we don't advise on selling, even if you have made high gains. Remember, when you sell, prices might continue going up. Would you buy that counter when prices are up? You'll be buying again at a higher price. It's not advisable unless market goes down. So market has gone up and there is information that market might go down. Maybe you are going to election year. Then you can sell, then wait the market to go down and buy back. But if you're targeting retirement, that time is time now to buy shares. Keep on accumulating. Only sell when you have made enough profits and you want to buy another share, or there is material announcement which will push prices down maybe later. So you sell, then buy back. So when you buy shares, you own a small piece of that company. If company makes profit, then you can get dividend. If company grows, that is in terms of revenue, then it means you will also, the prices will also go up. So if you sell at a higher price, then you make some gains. I've not moved the screen. I mean the first screen for understanding NFE. So what is a good stock then? A good stock then is a company which you buy into and gives value for your money. Remember, you're putting money in. You need to make some returns. And that will depend on the goals. Remember, when you're coming, we have gone through how to set goals in NSE. If you are looking for growth stocks, then you're looking at the companies that grow in price. And here you look at the companies which are expanding. They are making new innovations. They are opening new branches. They are adding new products on their platform. But most likely they are giving either low dividend or they are not giving dividend. A good example is Safaricom. Their dividend is usually low, but they invest much of their profits in expanding. So it is a growth stock. Whenever they are expanding, remember their share price is also appreciating. That time you can sell, take up profit. Safaricom, as I've said previously, they are supported mostly by M-Pesa, because everything you do on their app is linked to M-Pesa. Look at the mini apps. Mini apps are those products they're adding where you can buy insurance. If you want to buy products online, you can buy from M-Pesa or Safaricom app. Remember, when you are buying, you're also paying through M-Pesa. Those apps are just to support M-Pesa platform. If it is data, these days you can get free data outside Wi-Fi, hotspotting even from other friends. So there is a huge competition on the internet. If it is calling, these days you can call with WhatsApp as long as you have access to internet. There are also cheaper options out there. So for Safaricom is mainly M-Pesa. Even in their expansion to Ethiopia, it's just M-Pesa which they are taking there. It's not about calls. So for Safaricom, mostly it's through M-Pesa. If M-Pesa is growing, then Safaricom is growing. Then there is income or dividend stocks. These are shares that give dividend. If your goal is to earn through dividend, that is income, get income from NSE, then you would look for all stocks that give dividend. Now, depending on the amount that you want to put in, because that's what now will determine the number of shares you can buy, then you can diversify to different stocks. Then we have defensive stocks. Just a minute. I take an urgent call. Sorry for that. And if you're on the call, maybe if you need assistance, we can talk after this. I was on mute. There was an urgent call, but I've referred it to the afternoon. I hope now I'm audible. Confirm. Investor, there's somebody who have joined as investor. Confirm you can hear. Okay. So we have defensive stocks. These are stocks that withstand market downtimes. During election or post-election, whenever there is skirmishes or demonstrations, there are these companies which would never fall down. If market is on bear run, that is, prices are going down, there are companies which withstand that. A good example is BAT. These are companies which don't grow much, but they rarely collapse. Look at BAT. Whether there is post-election, whether there is market crash, people will still smoke. Look at EABR. People will still drink, irrespective of the economy. It means these companies are still making profits. They will still give dividends. So if you are looking at defensive stocks, then you look at companies which are rarely affected by even weather patterns. Because when there is drought, then it means some of the companies within NSE might be affected. Capture or Williamson, Sassini, they do tea. If tea have, then you expect them to be affected because that time maybe they are not producing enough tea to export. So there are those defensive stocks. There are not many as per se. Most of them BAT, ABR, then banking stocks apart from housing finance. I always exempt that housing finance because it doesn't give dividend. Banks, whether the economy is up or down, people will still take loans. They are making money. People will still withdraw. Your salary will still go through the bank. So the bank, whether economy is up or down, they are still there. So those are some of the defensive stocks. So it all depends with you as investor. What do you want? And as I said, from a young generation to 40 years, they are free to play with growth stocks. If you're above 40 years, start playing with income dividend stocks and some defensive stocks. So always have a goal when you're coming to the market. And it does not mean anyone below 40 years, you can't go for income and dividend stocks. As I said, growth stocks, some of them are also dividend stocks and also defensive stocks. Only the shares that don't give dividends, that those ones, they qualify to growth stocks as long as they are growing in revenue and sales. So when you're investing, at NSE, we have different sectors. It's not just these. There are several sectors in the market. So you find each company belongs to a sector or an industry. Sector is an industry. And each sector is affected differently. You find prices maybe in the telecom, where Safaricom is listed, prices are going up. Maybe at that point, banking sectors, prices are going down. So they are affected differently, depending on what affects that sector. So we have banks or banks for our banking sector. Most of the banks, they do well when interest rates are stable. Because remember, most of the banks, they make money through loans and overnight trading to corporates and also overdrafts. That's where they make much of their money. If there is a high default rate, then it means banks are also suffering because it means people are defaulting on their loans. So you find at that point, maybe the prices are going down. We have telecom sector where we have Safaricom. I think it's the only one which is listed under that sector. When data and mobile money grow in the form of in terms of usage, then you find that sector does well because then the price will go up. But then when there are new regulations or new rules that affect now mobile money, like tax is introduced in mobile money, all of us now we either move to cash transactions or we move to bank. So any regulation, like there was that proposal for KRA to access our M-Pesa statements. So you find at that point, we will all panic and start holding in cash. That affects Safaricom directly. And you find the prices are also affected. Agriculture, as I've said, weather patterns. And also, it's affected by global prices because for them, they do export of tea. EABL, it does well during festive seasons, around April and around December, because that's when we are merrymaking. So that time they are making money. When they make huge profits, they share with you as dividends. But then when taxes are introduced or regulations are introduced, remember they affect alcohol consumption. You expect breweries to be affected. You find the prices have gone down. But is it permanent? No. That's why when you are looking for a sector to buy, always check what is affecting that sector. Is it a long-term thing or a short-term? If it is short-term, that is the best time to buy because prices are low. If it is a long-term issue, then avoid such companies. A good example, let's go to Mumias. It used to have its own historical upside when it used to do well. Then along the way, investors decided we are not supplying sugarcane. Politics came in until it was suspended. By investors, by their own suppliers refusing to supply, it means this company will start struggling. That's a long-term thing. Politics, they may be short-term, but we have seen them being extended such that court comes in, you find there is a court case, then CMA comes in. Whenever there is a court case, CMA will always get in. If that court case will affect the prices to a significant level where you as the investor will lose, they suspend that share. You will still be a shareholder. Your shares are there in quantity, but they don't change in value. Remember, this company is not trading until that suspension is lifted or CMA gives another guideline where the company may be told, wind up, sell your assets, pay shareholder. But remember, when they sell, first of all, they need to pay their debtors. They clear all their liabilities before they pay you. So that's why it's always good to check sector, what affects that sector. Come out to the company itself, check what may affect that company. If there is a lot of politics, don't go into that company. CMA, the worst thing they hate is politics. When they see politics, they will suspend that until politics end. Look at Umeme. Government decides we are taking over power distribution. CMA suspends both at Uganda. So once it is suspended in Uganda, Kenya suspends. Until they decided, let's go to the court, we get some payment. It came back. It paid some dividend. We don't know the future of that company. Would you still want to buy? It has been suspended once. Do you want to still buy? If a share has ever been suspended, chances of being suspended again are high. So before you invest, always check. If it is suspended, it is back. Just check from the time it was unsuspended to current, how has it been performing in terms of sales and revenue, debt level, management issues. If you notice there are still issues, don't buy that company. But as I've said, some of them, they are short term. And decisions you make at NSE can affect you. Let's look at Kenya Re, what happened the other day. Just management change. Board started now there is a fight between now management and the board and the managing director, that is the CEO. It comes to the media, CEO is suspended. Why? because that fight would have escalated to the market. You people, you panic, you want to sell, you push the prices down. So the next thing CMA would do is suspend that stock. So that's why the board moved quickly to suspend him and appoint another one. And the company continued operating as if nothing happened. But what did we do on that day? We panicked. It's called panic selling. We pushed the prices down. And there are people who are waiting for that prices to come down to buy cheaper. So whenever there is a price, you see a sector is affected or a company is affected, always know what is affecting that sector. Also check the sectors that are trading a lot. The sectors that are trading a lot. And ask yourself, why are people buying more shares in that sector? The first thing you first check is foreign investors. If there is more buys from foreign investors, then there is a good upside for that sector. Also get into that sector. If there is a huge sale, always ask yourself, interest exchange rates, are they in the favor of foreign investors? Because that's one thing that makes them sell. They sell before they're affected. If it's not, then check the research. What are they saying? Because there is a reason why foreigners want to exit. Maybe that time boards are attractive. Do you want to buy? Do you want to sell that time? Don't sell when they are selling. When they are selling, they push prices down. You wait for prices to go down, buy. When they are coming to the market, that is the time now you are holding your shares and you push the prices up because now they will be buying in bulk, sell high, make profit. So that's how you play with the different seasons. So you find like during elections, banks will often slow down because during elections they slow on raiding. But that time, that's when you need defensive stocks, stocks that you know won't be affected. BAT, people, as I've said, people will still smoke. EABL, even if bars are closed, people will still find a way of buying those. Food sector, people will still continue buying food because they need to survive. Safaricom, you need to chat with people during that time. You're using airtime. You need to transact quickly. You're using M-Pesa. So take away here, a good stock is not the cheap stock. They are called penny stocks. Those are not good stocks. It is your goal that determines a good stock. You don't want to buy a stock that is not giving dividend, that is not appreciating price. You'll be stuck with your shares, which you either have to make a decision to sell at a loss or just hold forever. A good example, Eveready. I usually use this example. Eveready, even if you see prices going up, don't be tempted to put all your money there. Why? It could be short term. Right now, we have one share rule trading where you can buy one share. New people in the market, they think expensive stocks, they are for the people who have money. Let me buy cheap one. They will buy Eveready. When will that price go above 3 bob to make even, to break even? Eveready is not innovating. I've not seen, apart from the batteries they sell, I've not seen anything else they have done. We would be seeing maybe televisions they have made which have rechargeable batteries from them. Mobile phones, they should be competing with the companies that develop those batteries. Wall clocks, I think that's the only thing, and remote, we are left to use those batteries. I don't see anything else. Radios, we have solar, and we have electricity. And with time, you might find even wall clock, you don't need that battery. Remote, they might innovate and decide, let this remote be rechargeable. We are doing that with a computer mouse. You can recharge a mouse and use it wireless. What stops a company from developing a wireless remote that can be charged? Or even the TV, we have touch screen. Do you even need a remote? It means Eveready is being pushed out of market. But if they were to innovate and you see the prices have started going up, then that tells you this is a growth company. So then we come to how to research a company. So you have understood how market works and which is a good stock to buy. That depends on your goal. Then how do you research? Brokers, they do research for you. If you go to online social media and other platforms, you find people giving their own view. Remember, that is their own independent view. And always check. Anyone who is regulated by CMA, they always give a disclaimer, which we don't read. Always read that disclaimer. Why? Because it is you as the client who needs to make an informed decision. Without your own research, you'll be relying on somebody else's advisor, which it's good, you'll make money. But remember, when that somebody is not there, you'll be left stuck alone. So when you're doing research, the first thing is to check company background. What are they doing? I've given an example. You need to know what they are doing, not just buy stock because it's there. Safaricom, what do they do? EABL, what do they do? How do they make their money? You don't need to research the company from their website. Just from their financials, you can tell what they are doing. So first thing is to know how they make money. You do not want to buy a company which is reporting profit, yet money is being pumped in by investors, their own investors or shareholders, but they are reporting profit without any tangible sales. Yet there is a company which is making money through frequent sales, telling you what, this is a company that is strong. A good example, Safaricom. Most of their revenue is from M-Pesa, but also data and airtime play a small contribution. So once you understand where this money is coming, as long as M-Pesa doesn't have any competitor, you expect Safaricom to keep on growing. KCB, banks, equity, Stanchart, all these, they make money by giving loans and charging fees and overnight trading and overdrafts. EABR, I don't need to even emphasize on that. People still drink. So if you don't understand what a company is doing, don't try to invest, because you might invest, then you're stuck with your shares, which you either have to sell at a loss or just hold forever, which is not making gains for you. So once you understand what a company does and where they make money from, you can even project their future growth. Second, you need to check their annual reports and investor presentations. When companies are making their announcement, that is when they are releasing their results, that's the best time to join in as an investor. Remember, as an investor, you are entitled to that information. When they announce the annual results or half-year results, just check inside. What is their revenue? Is it going up or is it going down? Because if it is going down, then it means they are reducing on sales, profit are reducing. They might reduce on dividend or decide not even to give dividend. The next thing, you might find the company goes below the performance. It ends up crossing. Remember, it is still listed at NSE. It can't delete until CMA gives a green card. You find it is suspended. So revenue is something you need to check. If it is going up, it means this company is growing in sales. Check profits after tax. Where are they investing? Is there any tangible innovation or expansion they are doing? This comes through business news and business data. When you start investing at NSE, business section of any news will be your friend because that's where information is. Check the profits. Are they making money after everything, including tax? How much are they left? Out of that profit that is left, how much are they giving in form of dividend? Because that tells you future of a company. If They are sharing profit with you as dividend. It means this is a company that is growing. It means part of it they are investing, part of it they are giving you. If they are not giving you dividend and they are making profit, but they are growing in terms of expansion and innovations, that's a growth company. So you always focus whether the company is growing, because if it is growing, your shares are also growing. If it is shrinking, remember your shares will also shrink. But again, as I said during introduction, when you see you're making losses, those are not actual losses. You have not sold. You only make losses when you sell. We always advise, even if the prices are going down, that is the best time now to buy more. To push your average price, which is your break-even point, down. So that when market improves, now you start going into a profit position. So if you find your portfolio is on loss, never panic. Prices have gone down, buy more. Push that average price and average cost down. So market value, when prices improve, then you surpass that break even point. I've done that in the previous video. It's already on my YouTube channel. So you can just go and watch and know how break even point work. So whenever a share is going down, buy more. Push your average cost down. If you're looking for profits in terms of sale, when market improves, now that time you can sell. But if it is dividend stocks, never sell. In the last Saturday's session, I showed you how you can build a portfolio with just 5,000 a month in the next 20 years to 1 million portfolio. It's very easy. Just put in 5,000. In 1 year, you have 60,000 in shares. In 10 years, you have 600,000. That is in 10 years. Remember, there are dividends which now start streaming in. You are investing. You might find you have even surpassed the 1 million. In your retirement, you will have a portfolio that is giving you dividends as a salary. You don't sell. Your work is just to come after expenses, and maybe you have deducted part of what you give to your children or beneficiary. That time the dividend is even catering for their expenses. And you're using now that dividend to also support them invest. Remember, now you can open a minor account, you start investing. When you're handing over to them, maybe that's the time you're going to retire. When dividends come, you're also supporting them build their portfolio. Then one time you decide now to share your wealth, you share these shares with them. We only, on our side, we only require letters of administration from the court or court letters instructing on how to share that wealth. That's why it's very important you make sure your children knows what you are doing. So when you're growing, remember you are growing also your future generation. That's why I'm saying, even if your portfolio is shrinking, don't sell. You target passing that wealth to your beneficiary. There is no right time to buy shares or right time to enter the market. As long as you have money, put it there. Look for a good stock, buy. Let it remain there. If it is a dividend stock, never even think of selling. So the other source of research is checking news, CMA and SC announcement, and market trades. As I said, as an investor, business news is your friend. Because any announcement made there is official from the regulator. The regulator have given green light for that company to give that news. Any listed company cannot just announce anything without CMA and CMA approving that. CMA, as I said, are the final say in the market. What they say is the final. If they say a company will make announcement, it's them. If they say don't make this announcement, you can't. NSC are the ones who are mandated to circulate that information through brokers or even through their website. For us, there is that link I've given for research. Join our WhatsApp or Telegram group. That's where we share research. Training is on the channel and community. So channel and community is for training. Research groups are for research related materials, and also our online portal where you can be viewing reports which are exclusive. We don't charge for anything. So what then do you check on news and NSE announcement? Dividend declaration. When a company declares dividend, it's a good sign for investors because you receive some money. And immediately that declaration is made, if you want to buy dividend stocks, buy during announcement date. At book closure, you find the prices have skyrocketed up. When books close, the following day is called ex-dividend. Prices usually slam down. It's called dividend dilution, where it goes with the same dividend you have received. The price will readjust down. And if at that time you can buy cheap stocks. So if you're trying to buy at book closure, you buy at high prices. Always target 30 when a company announces results. That's why when companies are now making announcements, always pay attention. If they say there is a dividend, just buy. Actually, that same day, they are making announcement. Prices are usually open. You only need to be careful you don't buy at high price. Or if you're selling, you don't sell at a lower price. Then when a company is making profit warning, remember this company is announcing that their profits are reducing by a significant figure. Their NSE and CMA requires a company to declare profit warning. That is, their profit will decline. Usually, it's 25%, more than 25%. They are required to caution the investor. When you see a company announcing profit warning, that's a red flag. It means that company maybe is underperforming, or maybe they had an issue. You need to understand why are they announcing reduced profits, or even their losses. Why are they reducing further? If it's just maybe a court case which they just paid, then that is temporary. If it is reduced sales, then it's a red flag. But remember, when companies are announcing profit warning, again, we are required to open prices. That time you can buy shares at cheaper price. So profit warning is when companies are announcing their profits will reduce with a significant figure of 25% or more. Or if they're in loss position, that loss will even dip further with the same margin of 25%. By regulation, they are required to caution investors. So you'll find that they may be in our commentary or in our reports, or even on media, a company is announcing profit warning. That is the time to buy because the prices are down. But again, understand why they are announcing profit warning. New policies and regulations, remember they will hurt a company. Also check for global events because that also affects NSE directly. Then management quality and corporate governance for any company. Remember, a good reader will translate into performance of any company. A bad reader, again, it's a risk. We saw this with Kenya shares. Just a single announcement that the CEO with the managing director have been suspended, prices slammed down. But it was temporary because the same day they reappointed an acting CEO. But that just announcement hits the market differently. You find prices have gone down. Look at some companies, a CEO exits, another one comes who is known, maybe have good reputation. You find that the market is excited. Everybody want to buy to be associated with that new CEO or director. Because remember, you are a shareholder of that company. You pump so many buy orders, you push prices up. Remember, prices are pushed by demand and supply. Whatever affects demand will affect the prices. Whatever affects supply will affect prices. So always check directors, CEO, how they have performed from other companies. I don't want to give examples here, but you have so many examples in NSE which you not really want to think about. But most of those stocks, I think they're already suspended. Whether the company respects its shareholder, are they transparent in what they are doing? Like Kenya again, if they didn't disclose this, then it means there is dishonesty to shareholder. Because as a shareholder, you need to know who is the managing director. Reinvestment of profits. When they receive profits, where are they taking them? If they are paying in form of dividend, then that's a good company. Maybe it is stable. They are just paying out. Stanchart, I don't think they do any expansions. They usually pay very high dividends because for them, they focus on investor. I think Stanchart, because it is a worldwide brand. If you look at Safaricom, dividend is low, but much of the profit goes to expansion. What does that tell you? In future, Safaricom will have grown to a level where they don't need to use the profits to expand. They start paying high dividends. So that's how now you start thinking. If I buy Safaricom now, what it is future? So we go to financial statements. Today I want us to know how to check income statements and balance sheet. So income statement, what you look for, you don't need to read everything. You only need to check their revenue. Is it growing? Then profits, and this is profit after tax and earning per share. So revenue is the total sales, money coming in, whether you check whether it is growing. For profit, you check because this money that is left after a company does their expenses. And also remember to check tax. Because now profit after tax is what they are left with. The tax they are paying, maybe they had other obligations for tax. You need to check that. Then earnings per share, that is the profit divided by the number of shares that are listed. A high earning per share, then it means company is making good money per share. All this, you don't need even to worry. Our research, there is a report I want us to analyze today, which comes with daily watch list. It has all this. They have extracted it for you. Then there is balance sheet, very important. Check assets and debts, that is liabilities and book value. Assets is what company owns, while liabilities and debts is what they owe. If liabilities are more than assets, then it means this company will not be able to support its debts in case it's told to pay the debt. However, if assets are more than liability, then it means the company is doing well. There is no company which operates without a debt. I've never seen. So you find they still have debts and other liabilities. Now the book value of a company is now these assets minus the liability, because that is the net worth of a company. If it is negative, then they are red flags. You need to understand why. If it is positive, then that company is doing well. Then you also need to check cash flow, where the money is coming from. Remember, reporting is one thing, and what you actually have in your operations is another thing. You can prepare a very good P&L balance sheet and share it with the public, but you have cooked your figures. What you have in your operations is below that. There are companies which do that, but at NSC, it's prohibited because of CMA. So you need to know how these companies are operating, so that you don't get into a company that's always on debt or is on loss position and it's not making money. A good example, KQ. It has always reported losses. But if you look at KQ, how many people use Kenya Airways when flying out? We like using private jets and other providers from outside. We don't support our own. It will never grow. Remember, they have costs to pay. If you don't support a company as a shareholder, what you're saying, the money I put in, I actually don't need it. If KQ was to go into a profit position, you'd see a very huge spike in prices. We are going to festive season. You expect people to travel, but most of us, what do we use? You don't want to use KQ. You want to use another company. It's the same thing with Uchumi. Uchumi, they had so many branches. Came in Nakumat, came in Naivas, and other small supermarkets. We stopped going to Uchumi and we went to Naivas and other supermarket. What happens to Uchumi? They still have cost to pay. It is still listed at NSE. Remember, they can't delist without permission from CME. If you're not supporting Uchumi, then you don't expect any growth. Huh? So our actions, as I said, both in the market and outside affect our valuation. In the market, if you panic, you want to sell prices down. If you're excited, you push prices up. These companies, they have products and services. If you don't use, their revenue goes down. If you're using them, revenue goes up. Why am I saying this? We have seen during elections, we will be excited and we are told boycott Safaricom, boycott this, boycott this. Their revenue goes down, prices go down. We can't blame NSE. NSE doesn't have any control. We can't blame the broker. Broker actually doesn't have any control with the pricing. So the other thing to check is dividends. That is the policy and payout ratios, because these play a lot. The dividend, as I've said, is a company profit that are shared with the shareholder once they are approved by the board. And that announcement will always be made public. Well, how much they are paying, the date they are paying, and the date you need to have shares. That is book closure. That's the date you need to have shares. Dividend policy is how often and how much they pay. In banks sector, as I said, Standard, they give a very good dividend. EABR, Capchorwa, Williamson T, those are high dividend paying stock, BAT. Some like Safaricom, yes, they don't pay dividend in high ratios, they pay more amount, but much of it they do reinvestment. They reinvest to expand. And that expansion, as I've said, one day it will come to a time where they don't need to use their profit to expand. Now they are paying full amount back to you. Price will have appreciated and dividend will have appreciated. Do you want to join late or do you want to join early? Remember, you can't predict price of a share the next minute. It is buy and sell orders that will determine. Then payout ratio is the percentage of the profit that is paid out. So if a company is not paying a huge dividend, let's say they are paying between 30 and 50, it means part of it they are reinvesting for growth. However, if a company is paying more dividend, then it is not reinvesting. Yeah? You first need to know what do they do, where are they making money from. Remember the things like BAT, I don't think there is any innovation they can do. EABR, I don't think there is any other innovation they can do. That's why they pay out from their sales. So when you're investing, don't just look at the share price, because share price might mislead you. You might come to the market and you see a stock is trading below 1 shilling and you want to buy, but there is no future growth of that company. You'll be stuck with a share. You come to the market, find a stock that is trading at 780. I think the ETFs which are already listed, we already have 2 ETFs at NSE, but one of them is holds the international stocks, the new ETF. The other one tracks the price of gold. You want to buy that, but is there supply? Yes, you can buy, but is there supply? It means it is a stock which, yes, you want to buy, but there is nobody to sell to you. And when you get, maybe the time you want to sell, there is nobody who you can sell to. I'll come to Q&A, don't worry. So there are things that you need to check. It's called a report card for NSE. One thing is revenue and the profits, whether they are growing. You want to grow with a company that is growing. You want to see the money that you have invested grow in value. So when the company is growing, remember the share price is also appreciating. This company is also giving you dividend. Don't eat that dividend. Bring it back, deposit back. Remember, dividend is paid directly to you. Deposit it back, buy more shares. And I always say, mine I always train on uh, having wealth, not making money. If you want to lose money at NSE, come with the mentality that I want to make money. You'll buy today, tomorrow there is a small spike you sell. You have not factored cost, you are lost. If you come, you want to build wealth, then here you're thinking, I'll buy raw. When prices go up, maybe I've made enough profit, I can sell, buy another stock. You're not withdrawing. When dividend comes, instead of using that dividend, let me return it back, buy more shares. The next time that share is giving you dividend, return back, buy more shares. It's called dividend compounding. With time, you realize how much you have grown with the dividends alone. I've given a good example, 5,000, how you can grow it in just 10 years or 20 years to 1 million. Depositing 5,000 a month, buying shares. Don't deposit and don't do anything because that money will not help you. Deposit, buy share. Right now, you can buy one share and above, even the most expensive. You just need to understand how much can I save for shares. If you have kids, open a junior account, a minor account. Put even 1,000 in that account monthly. By the time you're handing over to them maybe 200,000 worth portfolio that is paying dividend in their Jabo Junior bank account. That Jabo Junior is also earning interest. Withdraw that interest back to dividend stocks. When dividend again hits Jabo Junior, give it like a few months, it earns interest. Withdraw that interest back to shares. You find through that rotation, you have grown both portfolio and their Jabo Junior. You're handing over maybe 250,000 to your kid at 18. Me, when I was turning 18, I don't think I had even 20 bob. So you find you have grown your kid. By the time they are taking over them, now that time you have already taught them the market. They're also thinking a millionaire mindset, not how they make money. Because that is the fastest way you can make money. If you're looking to make money, I would advise you go to Forex and CFD. But remember, the fastest way of making money is the quickest way of losing money. Money market fund is short term. Boards, they have a fixed term and a fixed rate. If you come to shares, there is no fixed amount, there is no fixed time. You hold shares in your eternity. If you pass, they are passed over to your generation and they are never taken to unclaimed assets. Price will keep on growing. That's why we say shares is the best way to invest. But always diversify. Part of money, put in other assets. So you come to key ratios, then we'll come now to that report that is shared by research. We go through these ratios. I just want to go through the definition because our research team have done the bulk of work for you. This is just in case you want to do analysis on your own. One thing I usually don't like about NSE is that their data is not available online. For those who have come for international stock trading, which I do on Friday, you have seen you can harvest that data online with just a simple formula, Google Finance. You can harvest a lot of information out. You don't even need a broker. With just a Google spreadsheet, you can pull that and make decisions. NSC, unfortunately, you have to feed in that data manually. That have been done for you by our research team. We'll start with the price to earning ratio, PE ratio. The formula is the share price, the current trading share price divided by earnings per share. So if a stock is cheap, so for P ratio, it tells you whether the stock is cheap or it is expensive compared to its profit. So where do you get some of this information? I've said P ratio, you find it on our reports. But if you want to do research on your own, for price list, you can get on our app and portal. That price you see there, you just pick the current trading price. For PE ratio, you just check on their annual reports. You go to income statements, then you get the net profit, that is tax profit after tax. You divide by the number of shares that are listed. That will give you now the EPS, earning per share. So net profit divided by number of shares, because that is earning per share. Now you have the share price, you just divide, you get the P ratio, price to earning. So you have to compare with other peers within the sector. Then we have price to book ratio. As I said, these are just definitions. Our research have already done this for you. I'm coming to it next. So price to book ratio is the share price divided by book value per share. This will show you if the share is trading below its real worth. And for those who have been asking whether a share is undervalued, now you use price to book ratio. Or if it is overvalued, you use price to book ratio. Again, price to book value you can get from balance sheet. It's the total assets minus total liability divided by shares outstanding. That you'll always find in the balance sheet. Because CMA, remember, they have guidelines on how reporting is done. No? Then very interesting is dividend yield. This is dividend per share divided by the share price times 100. It's a percentage. It's a measure of income returns, and it is good for retirees. So for people who are in retirement, when they are buying, they usually focus on high dividend yield stocks. That is the stocks which are giving higher dividends. Sorry. For us, the other investors, you'll be looking for growth, but also share that is giving you dividend. This you can always get, because dividend per share, you can always calculate the dividend, annual dividend, divided by the share price, the current share price times 100. And you can also get this direct without even any calculation from companies' results when they are making announcements. Then we have earning per share growth. So you check how it have changed over the year, because it tells you whether there is a future potential for that company. So this you can always get from income statement. But again, our research team have already done that for you. So if you are looking for growth, for those who have been asking whether I can buy a share in which is a growth stock, you always check at these, whether it is rising, earnings per share. Then debt to equity ratio. The formula is now the total debts they have, you divide by shareholder equity. It will show you whether the company is borrowing too much, because you don't want to get into a company which is risky. Initially, Kenya Power used to do that, but these days I think we have seen prices going up. So anything below 1 is healthy. Anything above that, then you need to do some analysis. Then intrinsic value. This tells you whether the stock is fairly priced. It's a measure whether a company is overvalued or undervalued. I don't want to go into these details because they are in our report. I'm coming to that. Then there is a company results. How then do you read them? First of all, you need to spot profit trades. Whether company profits have been going up, down, or they are just stagnant. Then we have a dividend declaration, because most of them, they are usually even posted in company results. You check whether the company have an announced dividend and whether the dividend they are giving is lower than the last year and the previous years. Because then that would tell you of profit decline. Then you check why it is declining. Are they investing more? Then that is a growth stock. Then profit warnings, as I said, if a company will announce a fall in their profit or their losses by from 25% and above, they are required to give profit warnings. This time, you find people want to sell to get out of that company without even checking what is aiding that company. There is KQ and Uchumi. They have issued multiple of them. And this time you find people want to sell. You push prices down. So it's always good. This is one thing you need to take seriously because it affects you. Always check why a company is announcing profit warning. Don't sell because others are selling. If company maybe it's expanding to other areas, remember they have used part of their profit for expansion. No? If however there is no tangible expansion, it's just maybe operational expenses, then you need to worry. So always compare all these we have discussed here with the other companies within the same sector. You can compare banking stocks, Co-op against Standard against equity. See which one is a strong performer. That's where you want your money to be. So before we come to this, let's go to one of the reports that is shared by research. Let me get it. It's called Daily Watch List. Let me get it. I just show you where you can get this information without having to struggle. You don't need to do any calculations. I'm happy our research team started giving this information on their reports. Initially, we never used to post it. Let me just download. It's not Daily Whispers. It's called Daily Market Watch. Let me just download it. It is shared on our WhatsApp groups and Telegram groups, not on the channel. Let me just open, then I share that screen. Let me share that here. It's just a simple report. Let me confirm it's shared. So if you scroll down to page 3, there is this table. So you have the sector, you have the stocks within that sector, you have the current price, that is the price, this is the prices of 9th, the closing price. You have book value per share. After that, you have market weight, you have trading EPS, earning per share. So there's somewhere we saw that. So when you are calculating price to earnings, then you have dividend per share, then you have PE ratio, which we said is share price divided by trading EPS. So you don't need to calculate, it is there, PE ratio. Then you have price to book ratio, that is P/B. Then you have dividend yield, and you have payout ratio. Payout ratio is how much the company have paid from their profits in form of dividends. So what we don't have is debt to equity and maybe EPS growth, but I will try and talk to the team. Maybe they can add it maybe as a graph, because EPS growth, you need it as a graph, because those are the values you need to make decisions. So let me go back to P ratio. That is price to earnings. It tells you if a stock is cheap or expensive. Then we have price to book. It shows if the share is trading below the real net worth. Dividend yield, we have said, it measures the income return for your investment. So always now use this table. You don't need to do any calculation. And I think at the bottom, is there any commentary? All the stocks are there. All the stocks are there, including, let me see whether the suspended ones are there. Yes, TransCentury is there. The manufacturing, do we have banking, commercial? Just want to see whether they are all listed. I think it's only Mumia's which is not here, and it is not needed because that one is already suspended. So you have all the stocks. So you can use this table now to make decision when buying and selling. I don't want to go through it today. Today, I wanted us to first go through the terminologies. Next Wednesday, now we'll analyze for that Tuesday because they will have released for Tuesday. Then after that, now you can start making decisions. But I hope now you have seen where it is. But on my WhatsApp channel, in that community and Telegram channel, I'll try now and start digesting this for you. Because of in the interest of time, I don't want to keep you on, and we have a few more slides to cover. And if you have any question, put on the chat. I'm coming to Q&A for those who are asking for WhatsApp and Telegram groups. So I will share all these notes. You don't need to write anything. So you have gone through that. We have gone through that. Now we come to when to decide when to buy, sell, or hold. So what are buy signals? I think this we did on Saturday. One of them is when a stock is undervalued. That is when stock is cheaper than company value. That you use PE ratio. That is the time to buy. Then earnings growth. If their profits are going up, remember there is a future growth for that company. That is the time to buy and hold. Accumulate means hold. Hold means don't sell. Then when there is a dividend announcement, as I told you, when there is a dividend announcement, prices are usually low. Between that date and book closure, you find prices are going up until book closure date. That time you find the stock is trading at its highest. After book closure, prices go down. You want to enter early. But if you're holding for retirement or wealth, then you can buy anytime. So it's always good to buy stocks when they are cheap, especially quality stocks like EABR, BAT, Capchorwa, Williamson T, the ones which are trading expensively above 200. When the announcements are made, that is the right time to buy. Then sell signals. What can signal you to sell? One of them is profit warnings. If a company keeps on issuing profit warnings, if you're on profit in your portfolio, that's the time to sell. Look for a good stock. If you're on loss position, you need to make a decision. That money when you sell, buy a dividend stock, accumulate dividend back by reinvesting and recover the loss. That is a decision you need to make as an investor. If a company keeps on announcing profit warning and it's not giving dividend, you either hold which have some implications, or you decide to sell at a loss, but buy back a dividend stock, recover through dividends. Don't eat that dividend, invest again. Then when a company is overvalued, it might signal you to sell. Earnings. Then very important when a sector is struggling. We have said in NSE, companies are listed within different sectors. If there is prolonged drought, remember the companies which are in agriculture sector, they will be affected. Do you want to still hold? If you are going to election time, there are companies which will be affected during that phase. If you are a frequent trader, maybe you are looking at capital gains. Do you want to wait for the prices to slam down? If you are shares then why you need to hold? Hold means don't sell, but that time you can buy more. That's when fundamentals are stable, but they are not that favorable. Yes, a company is making profit, but there is no growth in terms of expansion. That time you want to hold. And maybe this time you bought when the stock was cheaper and the price have not moved with a huge margin. I've seen investors, you buy today, in the next minute, you are reporting you're making losses. Prices have not moved. As we did on Saturday, this market have cycles. There is a bear market when prices are going down, and there is a bull cycle when market is going up. And there is a season when prices are stable. You find like now we are going to election time, we might go to a bear season where prices will go down based on political environment. After elections, market stabilize. It's on bull run where prices now start appreciating. If you are a short-term trader, then you need to be aware of market cycle. If you're a long-term trader, you don't even need to worry. Whether the prices go down, yes, it is reported as a loss. When market comes up, it is reported as a profit. Remember, you are not selling. There are those defensive stocks you have in your portfolio which will continue giving you dividend. So for buy, always look for undervalued stocks, but which have a growth. Because you don't want to buy a undervalued stock which is not growing, because then the price will not appreciate. For a sell, always look for overvalued stocks and whose growth is declining. When it is stable, then that is time you hold, you are just watching. Then building portfolio and evaluating your portfolio. This is the last slide. I think this is one more slide, then we go to Q&A. When you're investing, don't just buy shares in one stock. That is, you have just banking stock. What if banks are affected? Buy from different sectors. Diversify, come to international market where you buy big giants like Nvidia, Apple, Alphabet. Alphabet is Google, Microsoft, and other stocks in international market. AIB is offering that. Buy ETFs. ETFs in international markets, there are many. In Kenya, as I said, we only have two. One is cross-listed. It has international stocks inside. There is other one for gold, Absa Gold. I would advise on the international one. Why? The stocks inside, they give dividends. I hope this ETF will be collecting dividend, then pay as one figure, maybe at the end of financial year or maybe at the end of its trading cycle when they are doing the balancing. I hope that is the direction this ETF will go. In international stocks, you have ETFs which track a sector. There are those which track they are purely for dividend. And they help you diversify. Because when you buy an ETF, you are buying many stocks as one unit. If one stock appreciates in price, another one depreciates in price, you are not affected because price is still de-adjust. That's the beauty of ETFs. But in Kenya, as I said, we only have one having international stocks. Hopefully our fund managers, they can start now packaging NSE stocks into an ETF, exchange traded fund. So their own funds, they list them in NSE. We have seen NSE CEO trying to lobby SACCOs to list their shares so that, in a SACCO you have two types. You have the shares and you have deposits. If you want to exit, you can get deposits easily. But for shares, you need to find somebody to sell to. So NSE, what he's trying to do is to allow now the shareholders, when you want to exit, instead of you manually looking for somebody, you can sell these shares to other shareholder. Hopefully it won't have regulatory issues and maybe risk aspect of it, because then you're opening for shareholders within a SACCO to sell their shares and maybe they have not cleared the loan. Remember, you can use shares in your own. Hopefully they think about that. But now in Kenya, I would love to see now fund managers listing their own funds, equity funds that are tracking indexes of shares that trade at NSE. That would be a major breakthrough in NSE, because then you'd buy maybe Safaricom, Equity, and other shares as one unit. If Safaricom is going up and maybe Equity is going down, you are not affected. If Safaricom gives dividend and Equity doesn't give dividend, the ETF is giving you the dividend for Safaricom. So hopefully we can see that. And when you are building your portfolio, as I've said before, always balance between growth and dividend stocks. And I have said growth stocks, most of them, they give dividend. Growth stocks are the company you expect to grow. They don't give dividend, but they invest. If they give dividend, it's small, but they invest heavily on expansion. Dividend stocks are the companies which pay dividend steadily. Every year they are giving in huge figures. So always mix both for your future wealth and today's income. That is dividend that you receive. Most of young investors, they always talk about growth stocks, but in NSE you don't have a purely growth stock. Most of them, they give dividend. And always rebalance your portfolio. We have talked about bull market when prices are going up. That time is time to buy growth stocks, appreciating in price, and buy when they're low. Bear market is when prices are going down. That's why you need to have defensive stocks. They caution you. And also move some funds, maybe to bonds or to money market fund, or maybe a fixed deposit account or a savings account. Or if you are lucky enough, if you can get maybe an account that gives you a high interest with a bank, core account, and always review your portfolio once in a while. During sideways or when the prices are stagnant, there is no huge price movement. That is the time to play between income shares and growth stocks. As more of it, because those ones now you can play with price. When it is low, you buy. When it is high, you sell. So for retirement versus growth portfolio, if you're looking at a retirement portfolio, then focus on dividends. Focus on heavy dividend stocks. Let them be the majority of your stock. Then other stocks you can add in small portions, but build up. If you're looking at growth portfolio, then focus on capital appreciation. Stocks that are not giving high dividends, but they are investing their own dividend. But again, in a few years, you find these growth stocks convert into dividend stocks. So before we come to I want to go to Q&A. Before we come to Q&A, that's my WhatsApp number. In case you are stuck with any question on the markets, trading, and also our platform, and any investment product you'd want to know, you can reach out 0723-384-775. And that is my office email. WhatsApp, you can reach out anytime. Calling, you can call during the day. That's when I might be available, or before 10 p.m. So that's my WhatsApp number. For those who have been asking for our WhatsApp group, let me share on the chat. I want to share everything, then I go to Q&A. I think the rest I had already shared. On that, you find the Telegram channel and WhatsApp channel, and also our groups. Let me quickly go through Q&A. It's time now to put your questions. I'll try as much to quickly go through them. The first question, I think the first ones I'd already answered. Can you share the links? Had to change from work to personal. I've reshared. Let me share again for the WhatsApp channel. This is for training. This is purely training. Is it? It's here. Let me also get the other one for community. So for the channel, there are no notifications. So if you don't like notifications, you can follow the channel. You'll only be checking whether there is any update. When you open your WhatsApp, there's that icon for channels. If you click, then it will show in red, but it doesn't give notification on the phone. For the community, it shows just where the messages are shown. You get a pop-up, and you can enable if you want notifications. And both of them, your number is hidden from other people. I don't want to expose that. My policy is I will never expose your numbers. Your privacy matters. So for that one, just follow or join. It's not a group. For the WhatsApp group on our website, those are research-based. That's where you get our research materials. And if you have any question, put on the chat. I'm just checking where I should start. That I've answered. From my analysis, it's like most stocks listed are on top, most price from 52 weeks. Is it right time to buy, or we hold until the cycle goes down, then start at lowest or close that? The market have been on a bull run where the prices are going up. I think from the time companies announced, that's why most of them they're at their highest. They did announce their results last month, and there are some which did last month but one. So that's why you saw prices going up. We also have one share rule, which now everybody came in, they want to buy demand over short supply. So again, prices went up. If you're looking at long term, that is retirement, building wealth through dividends, you can still buy. Remember, when prices go down, you still buy and average your portfolio down. No? If you are on capital appreciation, then I would advise you hold. Maybe you might think of selling those which have outperformed your target. Don't withdraw that money, buy cheap stocks. The ones which now will appreciate again. But again, concentrate on dividend stocks. As I've said in the previous trainings, there is nowhere you see those dividends accounted for. If you go to your statement, you never see. Portfolio, you never see. In CDSE, you never see. That's why you need to account for dividends separately, maybe using Google Sheets. Account for those dividends so that you know how much your shares are paying you. The other question, I bought ARM, Deacon, before they stopped trading. Is there any hopes? Most of these, they have been suspended by CMA, maybe because either there is a court case, management issues, or there is an issue with that company in terms of operations. For Earth River mining, I think there's something the market is waiting to be completed. It's only that it takes time. And you know, when politics get into any company, as I've said before, then we are stuck. Once that process is completed, I think there will be a buyout. For ARM, I think you'll be paid out. Or if the new company that may be taking over some of this company, it may decide to let them continue trading. Mumias, I think there could be a court case. And every time somebody wants to bail out Mumias, you'll find people running to the court. I think this year, Rai wanted to bail out by I think funding Mumias. Maybe his intention was eventually to buy out Mumias. Then you find somebody going just to block him from buying. CMA can't unsuspect. He had good intentions, but there are people out there, maybe they are not investors, they don't know the pain of your money being blocked there. And maybe they also have other intentions. But remember, this company have machinery. They are wearing out. At one point, they will not have even any asset to sell. What will happen unless government builds it out? The government we have had, apart from our former late President Kibaki, I don't see any other government which have tried to do something sensible on Mumias. We had the other government that came after that of our former president, Uhuru, and the current president, Dr. Ruto. I have not seen any Western politicians going to any of them to tell them we want these companies to be returned back to the market. People are playing their own politics. I hope people from Western now can start talking to those politicians. They try to lobby the government to return these companies to operation. Maybe when we get either a president or a deputy president from those regions, you might see some action. Mostly it's politics and other people having their own interest, but you are still a shareholder. Number of shares doesn't change. When company comes back, it starts trading, price goes up, your value goes up. But again, when you make substantial profit, those are stocks you move out of and you forget about them. Any suspended stock, immediately you make profit, even if they are making any innovation which have never been seen. Remember, there is a time they held your money. What stops it from being suspended again? Immediately you make profit, move out. Buy another stock that is stable. The worst thing you can do as an investor is to panic. A stock goes below with a 5 bob. You are in a loss position. You panic, you want to sell. There's somebody who is willing to buy. As long as there is no tangible evidence of what is affecting the company, never just sell because others are selling. When they are selling, you buy more. Because what is affecting NSE is usually panic selling. There are people who are waiting for you to panic to sell at lower price. You push market down, they buy. Like now, going back to the question above where prices are at their highest, there are people who are waiting for that market just to dip again. And people can do anything in this market to get the prices down. Just make sure a company announces, makes a funny announcement, like what did happen with Kenyari. It was just, I would call it funny because how does a managing director suspension relates to NSE trading? But with just that announcement, prices ramps down. People panic, sell. The following day, things go back to normal. Price now will start going up. You regret selling. Then when you make profit, don't be quick to sell. Always check where are the prices going. If prices is still going up, don't panic and sell. If prices have gone down, give it like 2 or 3 more days. See the trade before you make decision to sell. It could be temporary. Maybe somebody just came, they wanted to offload their so many shares. They just pushed the prices down, but it is temporary. The market, you sell, then when market goes up, you have no way of buying back that share cheaply. You actually buy now higher. There's another question. I didn't see the infrastructure sector. Does it mean it's not? Those were just examples. It's only that I can't expose all the sectors. Every sector is a good sector because it has its own cycles, and most of them they give dividend. Do Mumias even have any assets in its name? Yes. If you go to Mumias the factory, you find there are still those tractors. If they are worn out, their houses, those buildings, and also you as the shareholder, you are an asset to that company. They also have employees who are an asset to that company. Only that most of those assets are not movable assets. That is the downside. And that's why CMA cannot lift that suspension, because there is no assets they can sell to pay shareholders. The best thing that can happen is any government to come in. Now we have county governments. I am still wondering what is happening to the county government where Mumias is. This is the first sector, the first industry that they should be bringing up and try and protect it. When a politician says don't deliver sugarcane, remember some of these politicians don't have shares in these companies. Most of them, I don't even think they buy shares in NSE. They just make an announcement, but remember that announcement affects you as the investor. If maybe you have forums out there where you talk to people, always sensitize them what politics can do to the economy. Economy, one of them is NSE, it's part of our economy. So any pronouncement will have effects. Hopefully, government and county governments can come in and rescue Mumias. We see it come back, it starts trading, you make your money exit. From this discussion, the shares lows and highs need constant monitoring. Yes, you need to monitor, especially if you're a day trader. If you're just building wealth, then you don't need to worry, unless you intend to sell portion of your shares. Remember, there is nothing can happen on your shares. Broker cannot sell without your instructions. It's always good to check, but if you're looking at capital gains, then you need to frequently check. Actually, like 3 times a day. If you is just wealth, maybe when you want to buy or when the market have gone up and you want to sell some shares, that time. But you need to monitor your portfolio valuation. If you already bought shares for Umeme, it's not trading at loss. There are those people who bought at high prices, but again, as I say, remember you have not factored dividend, and they are following some money which have not been paid. That's why they first paid what they received. If they receive that money, they might decide either to give more dividend or expand in other areas, which then the prices will start going up. Again, Mumias have not delisted. They're still listed even in Uganda. In the last briefing they did, they are doing expansion in other countries. If they are able to secure those tenders, then Umeme will still be there. And they are also thinking of how to expand beyond power production, maybe doing other things. These things are tricky. What happens to someone who does not have time to monitor? Also, you said when you buy, when the stocks are low, but then it's not a good idea to buy from banks during election, but was thinking it would be good idea to invest during that time because prices will have gone down. Okay, let me first answer the first question. What happens to someone who doesn't have time to monitor stocks? You don't have to be there the whole day. You can decide I'll be checking my portfolio once in a while, just to check how it is doing. If you're buying for wealth, then you don't need to even be checking your portfolio. Remember, nothing can happen to your portfolio. If you are looking for capital gains, price appreciation, selling when prices are high, then that one you need to monitor a lot so that any price change, you sell. Remember, our app is on our phone. You are working with your phone. You only need a minute to check, then you continue with what you are doing. In terms of elections, banks, I didn't say it's not the right time to buy. Actually, during election time is the best time to buy stocks. But again, it depends on election mood. There are times I think there is election that was done. I can't remember when it was. And actually, we finished the election and continued as if nothing happened. 2007, 2008, things went south. prices went down. That time prices are down, it's the best time to buy. Like now, we are going to election time. We have been on a bull run. You might find that time market is on bear run. Prices going down with very huge margin. Don't panic and sell. Wait for prices to stabilize down, you buy. Uploading on YouTube channel, actually let me share that playlist. I usually upload on my personal YouTube channel for one reason. I don't want to expose the AIB to what I'm training. Remember, some of these are exclusive information that you may not find out there. And most of them, they don't relate to research and trading. I usually try as much as I can to give information that affects your investment. Let me see if I can get this link. I'm trying to get the exact playlist because that YouTube channel have other trainings which may not be of interest to you. We want to share the one for investment, which will cover international markets, NSE, money market fund, boards, and all other, including pension. It's only that I've not started on pension and other products. But as we continue, I'll be chipping them in. I wanted to first focus on NSE. Let me see where we were. Where is that question? I've shared the YouTube page where I will post, but also if you're on WhatsApp channel and Telegram channel and also the community, I usually share there with additional materials. So the NSE will never collapse. No, it can never collapse. Because collapsing means all the companies listed there have collapsed. There are over 60 companies which are listed at NSE. Most of them, they are trading. Where you can't expect a banking sector to collapse. NSE cannot collapse. Actually, let me tell you, the only thing you need to be worried in the market is NSE and CDSE collapsing. Because those are the main players. CDSE, they have your shares. NSE, they have the trading platform. Broker, you can move from one broker to another anytime. Regulator, I don't think they can collapse. Then listed companies, you only need to worry whether there are issues. CDSE and NSE can never collapse. Unless now, I don't know, even if economy collapses, there is no, I have never seen any scenario where they can collapse. Is it possible you share a Google Sheet that can assist in portfolio? Yes, there is one I'm building. Let me just share that link. Where also I'm posting these videos. It's my blog. That page, if you go to it, it has other materials. There is let me share this link. Let me share this page so that I can show you where you can get it. And these are based on previous sessions that we have done. But I will also now come back and rebuild now a complete one. There is the NSE spreadsheet tracker. This is for dividends. I will be adding now the details for dividend and also how you track dividends, because you need a tracker for dividend. And also the investment, when you reinvest your dividend. I don't want to go into details of this spreadsheet. It is the first one. Then there is portfolio model. Now that helps you align your income based on the shares that a summary of how you can split your income based on what you want to invest. So I've shared that link. It's based on the portfolio model is based on the video that I did last Saturday. It's here at the bottom. If you scroll down, There are notes. So I would also add these. This from bear to bull. The video goes into details of prices going up, prices going down, and those market conditions and how you can invest. So there's that video and the notes. Then millionaire mindset, how you make your portfolio to millions, and how people who invested in NSE became millionaires, and all other videos from start. If you're a beginner, all those videos are there. So I'll add the 12th one, which is today's video. And in all videos, there is no repetition. International markets, they're also on that blog in details. I'm not sure when I will complete this series, then I will restart again. NSE, it's a very huge market. You can't exhaust it. Let me go. Now I'll go quickly through the Q&A so that we wind up. Hopefully there are not many. Let me go up. Where were we? Sharing link that I've answered. YouTube channel that I've done. When is it advisable to sell shares on date of book closure or date after? If you want to sell, you can only sell on book closure. Date after is called ex-dividend date. Prices are usually down. That time I wouldn't advise because you can make losses. On book closure, you can make two decisions. Either you don't sell and take profit in form of dividend. Remember, when you sell on book closure, you are removing yourself from the register. So you can decide, I will not sell, let me take dividend. Or on book closure, if you have made enough profit in terms of portfolio, you can decide, the dividend I'm receiving is more, but if I sell, I can get more money. That time you can decide to sell. But remember, you're forfeiting dividend. So on book closure, you have two decisions. Take up dividend, or sell, take up capital gains, but forfeit dividend. Remember, on book closure is the date you need to have shares, 3 p.m. Is it good to buy cheap shares without looking at the chances of company being banned from NSE? Well, what if you are broke with shares? What will you do? Don't just buy cheap shares. Buy value stocks. They are cheap stocks, but which have chance of appreciating. Just check on our recommendations, which stocks they are recommending. Most of them penny stocks. You find even Akina KPLC, they are there. But is KPLC a good stock? Yes. It started giving dividend. So you check some of those things. Chances of this company coming up with an innovation, price growing, buy. And I think there's somebody who responded to you. It's not good. First, check company health. It's very important. Apart from GRD as an ETF, are there other listed in NSE? I think it's only one. It's called SMWF. That is a code for it. The one that was listed. It has the international stocks inside. You can buy. Hopefully from next year they will start giving dividend because the stocks inside are like in NVIDIA, Meta, and other big brands. And I know most of them, they give dividends. If that ETF gives dividend in international markets, then it will start giving dividend. With like 100,000, which penny stocks can you advise somebody to buy at the moment? It depends on what you're looking for. If it is short term, that one we wouldn't be able to advise because we can't guarantee price movement. If it is long term, there are many stocks with 100,000 that you can buy. Dividend stocks. Look at the stocks which have opened their dividends. Their dividends are still open. I'll share that link. I don't want to put that link on the chat because it will scroll down. The ones that will be giving dividends soon, just buy. When you get that dividend, then you can make decision. Do I want to sell and buy another stock? Or this dividend I've received, can I take it back? If it is other stocks, there is KPLC, there is Kengen, which you can buy. I think from the moment, those are the two penny stocks, though I don't call them penny stocks because they give dividend. The other cheap stocks may be speculative, but it's very risky. Can you compare SACCO dividend with equity funds? For SACCO dividends, remember they pay you compounded, and it is based on your monthly deposits. So the money you put in today, we run dividend up to December. The one that you put next month again, and the one that you deposited this month, even in December, we run for the remaining month because they reinvest those funds. But for SACCOs, they usually give out as loans. Then the income that they are getting is what they give you as dividend, including the investment they have made. Equity fund is where a fund manager is telling you to invest in a fund that buys stocks, maybe at NSE or international stocks. Then fund manager will pay you interest through that fund. And I hope that's what the question is all about. But you can also compare that now with investing in shares. What you do, you split your investment. You say on SACCO, I will be putting 5,000 every month as deposit. Remember for SACCO, you can only give them instruction to withdraw. So that is there, it is earning you interest. Then equity fund or money market fund, you say I'll put 10,000. The rest, then we put in shares that are giving dividend. When this dividend come, either top up your SACCO or your fund. Remember, fund has a duration you are in. When you liquidate your fund, you come back now, buy more shares. The dividend comes back, now you keep on rotating like that. But all of them, they give their returns. And for SACCOs, it fluctuates. For equity fund, they might guarantee you a return, the highest they can give. But again, it also fluctuates based on market conditions. For regular income, if NSC is long term, where can we make regular income special funds or T-bills advice? Again, diversifying. Don't put all your money in shares. Buy bonds, buy short-term treasury bills, go to money market fund, depending on your income. Put some in pension, others in SACCO. That way, SACCO will pay you a dividend at the end of their financial year. Pension, you withdraw when you retire or when you leave your current employer if you are sponsored. Money market fund, you can withdraw that interest. T-bills, government boards, they said you coupons, that is interest based on the terms of that board. So you can diversify across different sectors and also products. There is how do I buy shares through the app? I'm getting an error, access denied. Either the account is dormant or locked. Just try and lock my account. It will send you an automatic PIN. Try to log in. If you get access denied, just send me your ID number. I check if it is dormant. There are forms you need to fill and send to us. We just activate. Could you give an overview of AIB Daily Whispers so we understand? Let me do this at the end so that I release those who may want to go back to the work. Let me just note it. Daily Whispers. I'm coming to it. But next week, we are exploring now further those terminologies we have gone through today for Daily Market Watch. So today we can go through Daily Whispers. What do you have to say about presentation made by Honorable Nyoro on social media on investment? I think Nyoro is honest. He's actually an investor. He used to have a stockbroker as an agent, so he knows this market. What you see him saying is usually what is happening in the market. However, always look at the political aspect of it. If it is inclining much to fighting government, I always tell you, treat that as market noise. If it is inclining towards investment, As I've said, did Inyoro have much experience in this market? He's one of our agents in the market. He used to be an agent, so he knows the stock market in and out. But again, on social media, remember this information is not verified by CMA. That is his honest view. But as I've said, he's one of the best politicians you can listen when it comes to stock market. He invests heavily. He's a major shareholder in KPLC. As I've said, he had an agency a long time ago. I hope it is still in operation. He knows this market in and out. WhatsApp groups, I've shared that link for our website. Just go there. The links are there. If it is full, I'll change that link. You can check later. I'm still struggling to understand the difference between PE ratio and price to book ratio. From the explanation, looks like they are all looking at the price of a stock relative to its worth. Maybe what we can do, Vincent, let's meet next week when we are, because now that I will use an example, picking stocks. It's only that because of time today, I wouldn't be able to answer the questions and pick the stocks. We see how you can use price to earning and price to book to make decisions in the market. But all of them, they mean different. They are different. The other question, so this one, maybe we can join next Wednesday. I'll go into details. If Saturday I'm able to make, I will announce on our social media. If I'm able, then I can also touch on it. But the next presentation for NSE, it's breaking those terms now, using that data watch list to explain to you everything. I need to transfer my account to AIB Access, where I have opened and funded the account. I don't get much from the other broker. Please help. Irene, for AIB, we actually welcome you so much here. What you need to do, because you already have an account in AIB, if you don't have, you just open or through a DigiTrader. Immediately you get your CDSE account, go to the other broker, ask for transfer form, fill in, let them capture and stamp. You said to us, we finalize the transaction. That's it. And you don't have to go physically. You can ask them for a clear copy online. They send you form, you fill in, scan a clear copy, sent to them. They capture, they share with you. Share that clear copy with us. We complete the transaction. Shares now move from them to us. If you need any help, my number is there on the screen. Just reach out anytime. How to buy global ETFs? Currently, we are going through our trading desk, but you can come this Friday where now I go through back to international markets. They trade with normal shares. You buy the same way you buy shares. If you say AIB buy for me one ETF of, let's say, VWO, that is S&P 500, 1 unit, you only need to give us that money. That if it is trading at $200, that's what needs to be in your account. We will execute the same way you put orders on DigiTrader. We will put VWO 1 unit, then clicks buy. That's it. When it comes to DigiTrader, it's the same thing. There is no speciality in buying exchange traded funds. You execute, they trade just like normal shares. Come this Friday, I'll take you through everything. Thank you for presentation. From your view, how would you rate the insurance industry currently? I think insurance industries right now, they are a good sector to buy. I think most of them, they did announce their results. And when you're looking at insurance industry, don't look at the product they sell, insurance products. Most of these, they also have funds, fund management wing. So even if insurance sector side, that is insurance product, they affected, they have the fund management and also investment side. They are good, but also check their performance as individual companies. There are some which give dividend, and there are those which have not given dividend for some time. Let me actually check. Hopefully, I think Britam is one which had not given for some time. Let me just check for you. On that dividend worksheet, the tracker, Britam, where is it? They have not given dividend since 2020. So it could tell you, you may want to buy maybe for future growth. But don't concentrate so much on one sector. There are CIC, they give dividend. Britam, they don't give dividend. Jubilee, they give dividend. You may want to maybe I can do that next time, but on your own, you may need to see why they stopped to give dividend. Maybe they are investing in expansion. How does one start investing in international market through AIB? Currently, we are going through our trading desk, but Friday I will take you through. Also on our website, just go to trading, then global markets. There's a form you need to fill in, W8BN form. It is used for tax declaration, but we are not sharing that form with anyone. There is no tax obligation on you. It's just for our record purposes. Actually, international market will not know you and your KRA PIN and all that. That actually is not even known by even KRA themselves. There is no tax you pay. The only tax is withholding tax on dividend, and it is deducted at source by the registrar they pay. It's them who file. So once you fill in that form, we are using the same account. You only need to fund, give us the orders, we execute on behalf of you. There is a portal for you to track your performance, but you're in the process of migrating to DigiTrader, where now you'll be able to buy fractional shares. For now, we are giving full shares, where you own part of, let's say it's Facebook, it is owned by Meta. So if you buy Meta, when you're chatting with your friends, you can tell them I am shareholder of this WhatsApp, because they are owned by Meta. So you're starting with one share and above. Fractionals is where you buy a 0 point share of. Instead of buying that full share, you buy a 0 point, which allows you now to enter into that market at cheaper price. Share the market condition timing like bear and bull. These are dictated by market conditions, but right now we are going to election time. Expect bear market. But in the next tutorial, and also on those Telegram and WhatsApp channel and WhatsApp community, I will share the timings, also based on the past cycles. But right now, as I said, during company announcements, we are usually on a bull run. Like now, we are on bull run. Hopefully, as we go to festive this season, because most people want to sell, they get money, we might see now a bear run, maybe all the way to January, when people are taking kids back to school. That's our market praise. People want to sell to get money for holidays. Then you also have schools coming in. So during that time, there is so much selling. So prices shoot down at a very high rate. That time we'll be going into bear market. But again, even stocks themselves, they have a bear run and bull run. Like now, when we are in that bull run, there are companies which are still on bear run. So you also need to check individual companies. I don't understand the market report sent always through WhatsApp group. If it is daily whispers, I'm coming to it after Q&A. If it is daily market watch, I just went through the terminologies so that over this weekend, you can just go through the terminologies just to get what they are. Then next week we digest. Then we see how our research comes up with buy, sell, and hold recommendations. What do you post the trainings? Where do you post the trainings after they are done? On those channels. Yeah, the recording, because this one I don't have much to edit. It's just to hide your profiles for the team. that I can do overnight and share maybe tonight or very early tomorrow morning. Account is declared dormant and I would like to retrieve it. I've been writing follow-up emails for the past 1 week, but no communication. How do you go about it? My WhatsApp number is there. Just reach out. Then let me know the email, your email address, the one you used to send, and the person you sent to. Also forward a copy to my email, pc@aib-accessafrica.com. I follow up on your behalf. For dormant account, it should not take time because there is nothing you are editing. Where it takes time is where there are change of records, especially at CDSC level. Dividend calculator, let me share again. I didn't want to go through it today, but I will touch briefly. Let me also add it. Calculator. Let me first go through the Q&A because I can see it keeps on changing. I might not be able to tell where I was in Q&A. Is this session recorded? Yes, it is recorded. I will share the link. You can even get in touch with my WhatsApp number. I will share with you. About ETFs, I think I explained this. Basket of shares packaged together, they are sold as one unit. So you find Meta, Facebook, maybe NVIDIA, they are packaged into one, they are sold as one unit. A good analogy, when you go to market, you have an option of buying single fruits, onions, maybe some other fruits like oranges, maybe you want cabbages, you want another fruit, and maybe another food products, maybe potatoes, you can buy individually. That's what you do currently, you buy individual stocks. Now you can go to a supermarket, you find all these, they are packaged into one bag, you're buying as one unit and they have a price. That's what ETF is. The many shares packaged, you buy as one unit. And they trade at exchange. That's why they are called exchange traded funds. It's a fund trading at exchange. This fund is managed by a fund manager or a fund provider. Some of fund providers outside, you have BlackRock. They have their own ETF. When you come this Friday, I will explain. I think I need to go back to the basics of ETFs. But also on that playlist, there is that specific video on ETFs. Have you already covered how to buy global ETFs in previous? Yes. Just check that playlist. If you are stuck, let me know on WhatsApp. I can take you through. Thank you, Beth. And for the rest, thank you so much. Let's continue. Should we sell our Kenya Re stocks? Don't sell. That was just temporary management issues. It has no effect on the market. It is sorted. They already have an acting. The company continues as it is. So no need to sell. How much debt is too much to avoid a company if debts are more than assets? It means the company cannot be able to repay those debts. You as the shareholders, you will not get paid. Remember, if a company is getting delisted, they sell their assets, they liquidate their assets. The first thing they pay is all their debtors. So if debts are more than their assets, it means they will be left even with a debt they can't pay. So you as the shareholder will not be paid. So those are companies you try to avoid. How often are dividend paid out? It depends on the company. That spreadsheet of durations the company announce, but mostly from around May to August, then there is September to December, and early January. You find there are those companies pay. You only need to check on price list for NSE, but I'll show you the calculator and all that. I'm creating that. I feed that data. Let me first quickly go through this. Is it okay to link AIB account with the Dosika? What does that mean? Let me give you a history of Dosika. AIB brought up AIB DigiTrader around 2011. We came up and decided to provide APIs API is application programming interface that allows a third-party app to connect to our database. When we brought that, we gave it to my stocks, which already integrated such that you can buy shares through my stocks. Remember, they are not allowed to sell shares at NSE. It is AIB. So you go through my stocks app through AIB to NSE to buy. My stocks sold part of that, my stocks, to NSE and rebranded to Dosika. So if you download my stocks and Dosika, those apps look the same. I wanted to clarify that so that when you download both apps, you don't get worried why they look similar. So Dosika is owned by NSE, but the way it connects through the broker API platform to NSE. There is no downside of using Dosika, only that your orders are not real time. We have to push them. You don't have direct access to the market, DME. Our DigiTrader have DME, direct access to market, direct market access. So if anyone is telling you don't have DME in NSE, they are lying. DigiTrader, you are trading directly at NSE. Dosika in my stocks, you first pass through the broker pushes the orders. It is you as the investor to make decision, but I've given you just a guide. DMA against offline. You don't want to miss a minute in the market. WhatsApp group, I will edit that link. Our groups are getting food quickly. You know, after now we started giving information for free. We are getting investors joining in. I will change that link. You can check later in the day. Thank you so much, Esther. And remember, we also train chamas groups. And if you have friends you want to be trained, you can always reach out. We do it for free. I actually do it for free. I don't charge. All trainings are free. I opened my account, told to wait 3 days, but still waiting. Peter, share your ID number on my WhatsApp. After this, I follow up. Examples of dividend stocks for newcomers to start with. You can start with the current active dividend NCBA. And remember here, you're not buying NCBA broker, you're buying NCBA group, including the bank. You're becoming a shareholder. Then there's also ABSA. These are active dividends, which you receive in the next few months. Then you can also diversify to Safaricom. That is a growth stock, don't sell. If you have enough funds, now you can buy the expensive ones. DTB, it's a good stock you can buy. It's a banking stock. You can actually add more, but if you have more shares, I would advise you look for another stock. Growing faster than usual, that tells you that stock is on bull run. Maybe it's not the right time to buy. You can think of going to another stock. When it is on bear run, then when the prices start shooting down, you buy more. How does dividend get paid to CDSE account or registered account? When you're opening account, you give either your M-Pesa or bank details. That's where registrar will set. They set directly to you, depending on what you select when opening account. You can change that in between. You just need to ask us for the form to amend dividend payment. When company declare dividend, will be paid directly to you. If you want to reinvest, you just deposit back. PE ratio, I think let's tackle this next week now with an example, because that time now we dissect our daily market watch. So that time we'll pick different stocks, dissect details, and we see whether what our research tells you on daily whispers. Buy, sell, hold, whether it is true, because they use that. I bought Safaricom shares around that per share, then sold everything at 24, so that we made profit. Now Safaricom is at 29. Is it time to buy again? I was waiting for a bear run, So I can buy them, though there is a speculation that bull run will continue up to 50. Okay, it is not guaranteed for it to go to 50. I believe what you can do, just think of long term. You can buy maybe small portion. Then the rest amount, buy a dividend stock that is paying maybe in the next month. When you get that dividend, because it is free money, you're not incurring any cost to buy more Safaricom. Then that time you're watching the prices. If they are dipping further, you can sell that. You can sell this stock you bought that gave you dividend to buy back Safaricom, or you can leave your money there, watch the market for the next 2 to 3 weeks. You see whether the prices will continue going. If they are continuing going up, then you can decide to buy more. But also check our research analyst, the target price they have given. But for Safaricom, it's a growth stock. There is a possibility. Remember, there is time it went to 40, then it is slammed down after dividend. I hope that BRN was not because of announcement for results and dividend, because then you start seeing the prices going down. If expansion to Ethiopia materializes to something that gives more revenue, then we can expect it to go to 50. But maybe by next week, I will have come up with an analysis to tell you whether it is that bear a bull run will keep on continuing. For group, again, I will share that link. As I said, our groups are getting filled quickly. You can also follow my Telegram, WhatsApp channels, and also community. I'll share the link there. Is it possible to share slides on the WhatsApp group? Yes, I'll share the link. I will upload on that blog. Then I'll share that link. You can download. They are free. Once you open it is PDF, you can download a copy. And you can share it with your friends if you want. Let them also learn the market. And if you have any question, please reach out. On that blog, that's why I want you to go to that blog. I'm also expounding now these slides in details. Remember, for slides, I can't put a lot of details. And I also plan, hopefully, when God bless me, I can do an ebook, which I can share for free now on all what I'm training, which will be available for free. I usually don't charge anything on trainings and other things I do. I prefer giving for free because that's how I also run. Okay, another question: as per analysis and recommendations on AIB whispers, they usually action such that buy, hold, sell on various companies. When it says hold, as an investor who is willing to buy at that time, is it advisable to buy? Yes. Even if they are selling sell, this sell maybe they are telling somebody who bought at a lower price, you can still get in. That is just a direction. If they are saying sell, they are telling somebody who bought at a lower price. If you have made profit, sell. But if you feel this account worth buying, you can buy that time. If they are telling you to hold, they are telling the people who have bought not to sell. They anticipate the prices will still continue going up. You can still buy and wait the prices to go up. But remember, as I've said before, I don't advocate on capital gains because that is the easiest way you can lose money. You can sell too early and maybe lose money. Think of wealth building, but when you make gains, sell that time. After Standard Chart ruling, the prices dipped the next day up to 320. What happened there in such a short time? Can a company deploy a fake buyer to up the price? No. That is market malpractice and it's punishable in court of law through CMA. You can't do that. What happens? Again, I said, investors' sentiment. Court case is filed. We panic. Standard is a very strong brand. We want to sell. We push prices down. The following day, you actually realize this court case was just a management or something else that was affecting company temporarily. You want to buy back, you put the prices up. So some of these court cases or some of these pronouncements always check, are they temporary? Don't sell. Don't panic. Don't do panic selling. Yeah? If a stock is giving you dividend, no matter what announcement, never sell unless you've made gains. Can you repeat? Consider talking on the volatility of the market in future. Let me note that. Maybe I can. Volatility also goes with bear run and bull run. Volatility, for those who may not know, is when there is a huge price spike. Initially, when we had odds and normal board, the spreads, that is the difference between the top ask and top bid, would make a stock very volatile. Now with one share, that spread have narrowed down. You find all stocks are volatile. Prices can move up, and they are also liquid. Liquid means you can quickly sell, but I will tackle that maybe in the next one. Any IPO coming? We had Kenya Pipeline. Hopefully it can come in. But mostly some of these companies are listing through introduction. Can I still buy Umeme? Guy, for Umeme, I don't want to promise you to buy. There is no promise. Is it promisable? How would I put it? Promisable future, or there is no promising future for Umeme. Remember, they are trying. I would compare these with you going for fishing. Would you want to fish where water is muddy or where water is clear? You don't want where water is muddy, because that's where fishes are hiding. In clear water, fish can see you. So for Umeme, you can clearly see where they are going. They already have a court case. You never know the direction. You are dealing with Uganda government. It's not like Kenya government. Anything can happen. This case can take forever. The tenders they have pressed bid, they might not get. I don't think they are looking at expanding in other sectors. So it is a risky share to buy right now. But if you are risk averse investor, you can buy. Is it possible for one to have separate trading account and one for yours and one for gains? No. You only hold one CDSC number with one ID. But either way, the shares that you are buying, it is you to make decision. When you have made enough gains, sell some, hold some. And when you sell, don't withdraw, buy more. The way you build wealth is by accumulating shares without selling. And when you sell, you are selling to buy another stock. When dividend come, buy more. So that when you retire, it is shares to take care of you without selling. Getting dividends without selling. International, yes, we are there from one share and above. For fractionals, we are working on DigiTrader. As I said, orders are going through the desk. You said email to us, then we execute. I'm the one handling that product. Come Friday, there will be training for that. Must you have a CDS account to trade? Yes, because shares are held at CDSC. You need a CDSC account. Opening is free. And there is a difference between CSD and CDS. CDS is for shares. CSD is government boards that you open at CBK. So if it is CDSE, you need one. That's the one you need. And you also need a broker account. You can open that on our digital platform. Just go to open new trading account. Can you sell shares through another broker other than the one they were bought? No. At broker level, you only see the shares you have bought with us. At CDSE level, you see all the shares you have with all brokers. So another broker cannot see shares from another broker. You have to transfer. And you can even trade with multiple brokers. It's not prohibited. But remember now you have work of managing the two accounts. How does dividend get paid to account? This I think I answered. It is sent directly to you. When you are opening account, you select where you want dividend to go, dividend disposal. If you select M-Pesa, it goes to the number you have given. If it is bank, you'll be required to give bank account. That bank account must belong to you. How can I buy shares from Uganda? For Uganda, remember you can't open account remotely. You just go to downloads, our website, downloads, you open individual account opening form, fill in that form, get all your documents, KYC documents, they are there at the end of the form, notarized by maybe a lawyer on your side. If you know Crested Capital, where they are, you can go to them. They can certify on your behalf. We have MOU with them. Send those forms via email. Chap will open an account for you. You can start trading. If you have access to M-Pesa, you can deposit immediately. If you don't have, you can deposit via bank, send email with confirmation, and you start trading. Our app is open to everyone worldwide, even foreign investors. What happens when the stocks you buy are rejected and you don't get money back in your account? No. When you place a trade, we only broke, we don't debit. We put a block to the amount equivalent to the number of shares you are buying. If the shares are not bought, it means the order is still valid. You need to get into the app and cancel the order. So as long as the order is in the app, that amount will be blocked. You have two options. Amend the order, that is modifying the price upward or downward to get execution. Or you cancel to remove the order, it blocks. Your ledger balance is never touched. Your ledger balance is only debited when there is execution. So you only need to go to orders, check whether there is an existing order. You check whether you have a modify, cancel. You can modify or cancel that order immediately. Company announcement schedule, you can get at our website, at the corporate, the research, then price list. Then you scroll down to corporate actions. If it is dividend, I'm coming to that calculator where now you have everything. Yeah? Which stocks are giving, I think it is dividend soon. Let me come to the calculator, you see them. Is this talk about separation? Is the talk about separation of Safaricom and M-Pesa for valid reason to sell shares? I don't think that is a valid, because remember Safaricom as entity is the one that is listed. They might decide Safaricom becomes the group company, but at it we have a Safaricom which handles data and the rest, and M-Pesa which handles payment. Only be worried if M-Pesa is listing again as its own entity. I don't think that will happen. Safaricom is they're splitting, they're only splitting their business units. Data may be on one side. I know they have wealth management, which they are starting, will be another unit. M-Pesa on its own, and maybe mini apps could be also be another unit, but all of them operating under Safaricom group. They might be brought to Safaricom group. The same way you have Equity. You have Equity Bank, you have Equity, other investment units of Equity, but all of them, they are listed at Equity group. If it is splitting from M-Pesa, that time, have some money to buy shares. Most people will panic and do panic selling by that time. Shares will be down. Huh? Actually, when you see something on social media, check its price. If it has gone down that time, buy. What if your parent died? How can you get shares to our CDSE account? For that, you go to the court. The court will ask you to appoint administrators. You decide how you want to share the shares. If you decide each and every individual beneficiary to get shares, it will be written on that court document. If you are not able to agree, just tell your family members, you agree, the administrators who are appointed, they open a CDSE account, shares are transferred in their name. Then they can share out to you later. Remember, dividends will still be coming to your parents' account, but now when you pay, they are transferred to administrator's name, those administrators' name will open a joint account in bank, dividends will now go there. Or you decide to open a trust, a company trust, which holds interest of the beneficiary. That is the easiest, because that is a company. Then you open a bank account. When now you decide to share, to individual accounts, this company now will transfer to individual shareholders. So for that, first go to for succession in court, get those succession documents and letter of administration, because it is the one that says where the shares go. Once you do that, and that's why in my previous tutorial, I think Wealth Builder, I went through how you can make, now you as a shareholder, you can make it easier for your children to inherit your wealth. Start today. Have a small spreadsheet where you list your children, the shares percentage they can get of your shares of each portfolio. Make sure they know where that spreadsheet is. That is like your will. When you're not there, they'll not be fighting. They'll go with that spreadsheet. They tell the court, this is what was said. Maybe you have even a will. That time, they will not have any issue. Also, in our old age, when you know you don't need the shares a lot, that time you can start transferring to them. Remember, that time they are the ones taking care of you, so they will not have any hurdles transferring. Maybe that time you have pension and other bank deposits that can help you. Remember, when we pass away, we lock this wealth such that children cannot use it to pay maybe settle bills, hospital bill. But if they already know how they can share, or you have already transferred, then it makes it easier for them. Benjamin, welcome a lot, and the rest always welcome. I'm always available. So apart from HFCK, big purchase by government officials, individual, what is driving the stock? Actually, that's what is driving. I didn't want, that's why I said, don't go to HFCK. I didn't want to talk about these. Let's go to Didignolo back. There's a time he bought KPLC so many shares. We didn't ride on his momentum to buy when it was below 2 bob. He accumulated so many shares. Who was he in the parliament that time? He was a chair of a very powerful committee. He had control, I think, of a finance side. Remember, stock market is the finance side. What would prevent him from having say in KPLC? He accumulated so many shares. He left that committee. What happened to the price of KPLC? Short, I think 10 times. That's the sad nature of our market, where politicians who know the market can play around with the prices. Right now, if he was to sell, trust me, he can go with so many millions. But for him, that was not his target, is to get into management of KPLC. Now with HFCK, for those who don't know, is housing finance. They deal with, it's a bank, but they also deal with real estate. Right now, we have a project which most of us didn't want to contribute to. Housing levy. What does it do? We have affordable housing project. Is there a possibility this project can be handed over to housing finance? If it is, why are a politician invested in it? So would you want to ride on that momentum without knowing what will happen? KPLC used to be a loss making. It never used to give dividend. Immediately after that, it is giving dividend. Prices have gone up. So these are politics you don't want to play in the market. But they are not market malpractice, because CMA would have flagged it. They were exposed. I think it was Honorable Kimani Ishongwa and Anthony Maura. Is it Maura or Muzaura? I don't remember the name. For them, they were looking to enter HFCK when it is low. Government hands over affordable housing projects. Remember, they are nearing completion. They need somebody to manage them. They can't give to an individual. It will be given mostly to a bank. Which bank have housing projects? It's only housing finance. I think the others, if they do, it's a side hustle. But housing finance would have taken that. They had seen that opportunity. That made us panic when we saw that news, and we started buying. You want also to ride on his momentum. Demand overshoots supply, price goes up. How does it overshoot? People will see you want to buy more. they will hold shares to push prices up. They make capital gains. That is the market for you. Demand, supply, the way it plays in the market. I usually don't like going politics because CMA usually hates politics. When they see politics, they will suspend that share. So when you start seeing politics playing in a company, you may want to get enlightened on the momentum, but check the future of that company before you get in. Those who became damn rich through stocks, what secret did they do? Check that video I did on millionaires journey. It's very simple. Just buy stocks which are giving dividend. I said 5,000 is enough. Start buying shares. When you get dividend, don't eat, return it. Even when price appreciates, the shares appreciate in price, don't sell. Do your work is just buy. Dividend comes, buy. I gave you time horizon. From first year of investment, when you're starting to fifth year, you won't see tangible results. Fifth year to 10th year, you start seeing the compounding taking effect. You start seeing dividends actually growing your portfolio. From 10th year, if you're not a millionaire, trust me, there's something wrong you are doing somewhere. 10 years in stock market with 5,000 a month is enough to create a good portfolio. What if you are doing above that? Then even your time horizons narrow down. That's how they made it. And playing with the market. There are those who have, I wouldn't call it market malpractice, but they play with the investor psychology. HFCK, let's go back to it. The investors waited for that announcement. They knew people would panic because politicians want to buy. Prices go down. They buy immediately. Then prices start to shoot up. When they make profit, they sell, go to another stock that is giving dividend. So millionaires never withdraw their money and they never use their dividend for entertainment. Dividend, if they pay bills, the balance back to shares. Over time, compounding, just go to that YouTube channel, listen to that video on millions, and one share to wealth. It is clear how they made with examples. If I may give you a good example, and I hope that client is not on this call, we used to have a messenger. We used to be sent by his boss, Mwindi. So the Mwindi would give him 1 million check to deposit in his account. Then he would give him 1,000 shilling. 400 is fare and lunch. 600 is for him to put in his account to buy shares. He would convert this 400 back to the share, so he has 1,000. One day he came and we looked at his portfolio, and you are just asking him, are you sure you are a messenger? But he will tell you a story. These are 1,000, I never eat it. When my boss sent me with the dividend which he have received to deposit, I've also received dividend I'm depositing. The shares he's buying is what I'm buying. So he's growing with his boss. That's how millionaires are made. The small amount you put, not the big amount you put. The small amounts you put. Through gains, they don't withdraw, buy another stock. Dividends, long term. Target, retirement. What happens for an account to be dormant? You have not traded for the last 1 year. The reason why we put them into dormant is to control fraud. For the longest, we have had 0 fraud cases on our side, and that's what we would want. But activation, you just fill in forms, it is activated. Hopefully, we don't have so many questions. I need to change your dividend sent. There is a form you need to fill, James. Just reach out on my email. I hope I'm still sharing that slide, or my WhatsApp. I'll send you. Can one have 2 brokers, and how does it work? Yes, it is the same CDSE, only that you are buying from different brokers. Only that now you have to manage both accounts differently. If WhatsApp group is full, you can join Telegram, but I will update later. Let me check whether they have opened another WhatsApp group. Minimum amount to start trading. For a new account, you put 1,000 to activate and use the same amount to buy. After that, it depends on the share that you are buying. A good example, Mumias is below 2 bob times 1, that is 2 shilling. Factor cost, which may come to around, let's even make it expensive, 0.5 cents. So the minimum you need is 2.5 shillings for every day. Now, if you go to Akina Stanchart, which are trading 320 times 1, you need 320, factor cost maybe 350. It all depends on the number of shares you are buying times the quantity. So that's just an example with one share. So share price times the number of shares you need, factor out commission, that's the amount you need. Which stocks are good for dividend, income, and growth? There is that spreadsheet I've shared. It has all dividend stocks, apart from the ones in red. Those ones for now don't touch. The rest, they are good. It is you now to decide. You can even decide to buy all the shares or just buy some that you feel you understand what they do and you know they have a future growth. Now that BAT and EFBR are not having any meaningful innovation, does it mean they are at saturation? No. These are purely dividend stocks. They give very good dividend. Remember BAT, I said people are still smoking. EFBR, people are still drinking. That profit is what they share with you. Notes I will share for it. Actually, let me upload after this on that blog. I will share that link. For notes, I will share after this. Then video, I will try by 12 midnight. I will have uploaded. How often should I buy, sell, or hold? I wouldn't advise on this because they are costs you are paying. You might end up making losses. I would advise hold. When you make enough profit at that time, you can decide to sell. But if it is dividend stocks, I didn't advise to sell. Just hold. Thank you so much for insightful response. Much appreciated. Thank you. About the dividend stocks, when do they give dividend? I'm coming to that on the calculator. I will explain. Let me quickly take questions. I will always try to buy shares, but it just says the orders. Just stays in the order, then disappears later. Please advise on what might be the problem. There is a dividend calculator I will also show you. It depends on the price you are selecting. If you are buying, you go to the ask side, top price. Match that and the number of shares you want. It will execute immediately. Any other price on the bid side, remember there are people who are also waiting prices to come down, and it's not guaranteed. After end of day, if you have put a day order, it will just cancel out. How long does it take for funds to reflect on DigiTrader when one sends via M-Pesa? Via M-Pesa, it is real time. And you have two ways. You can do it directly from the app or portal or through our pay bill, 548800. Then account number is your CDSE number. All these are on the introductory email and also on our website. Bank transfers, however, you need to send that bank confirmation. You can send to our email. I think it is there on the app. If you go to support, there is that get in touch. You can send from there or send to info@abaccessafrica.com. You can buy one share effective. Yeah, this is already there on the app. What is the difference between bid price and ask price? Let me explain through the calculator. Great lessons. Thank you so much. Can you buy NVIDIA stocks on AIB? Yes, through our desk, international stocks. It is coming to AIB DigiTrader very soon. Not just NVIDIA, Apple, Google, it's called Alphabets. All those big names you can buy. Let me go to, I think I have exhausted the questions. Let's go to the calculator. Hopefully I'm not taking much of your time. We go to the dividend. Then we go to the calculator. Let me share that. Let me pull it. I don't want to share the same screen I'm presenting. I care much about exposing our investor details. Let me share this link so that if you're following maybe on a computer, You can follow along. That is dividend calculator. I've shared that link. Ignore the advertisement. If you scroll down, there's this upcoming dividend calculator. You wait for it to load. When it tells you select stock, it has loaded. It has all the stocks and the dividends. It even tells you when they are closing. Each closes on this, closes on this. Those which have closed, it tells you they have already closed the books. Let's pick one counter. We have talked about NCBA. Then let's say you have number of shares, maybe 10,000, or that's what you want to buy, but you don't know how much dividend you receive. Just click calculate. It breaks down everything for you. I've just selected NCBA 10,000. If you're a foreign investor, you just select tax bracket, the type, so that because the withholding tax is different from Kenyan, and it tells you how much you pay, 5%. If you scroll down, it gives you breakdown. The stock is NCBA, dividend per share, 2.5, book closes on 18th, payment date, this is the date you expect to be paid, 2nd of October, you only factor around 2 to 3 or 4 days. Then it gives you gross dividend, that is dividend times the number of shares. Then withholding tax, how much tax will be withheld by the registrar and paid to KRA. Then net amount is what you receive. You only need to factor bank charges, it is EFT, or M-Pesa charges if you selected M-Pesa. So the net is what you receive. Then it tells you that they are down. If you have shares, don't sell on or before, because that is the date you need to have shares. If you sell, you miss on the dividend. If you are buying, you start buying from today up to and including that same day. The total you have on that day is what will qualify for dividend. Let's go to the dividend which have closed. We can pick KECB. Let's pick Car in general. Again, 10,000. It tells you the books have already closed and the date you receive money. Now, if you look down, it tells you check the shares, you can reinvest dividend. If you scroll down to this table, these are the shares again. You can use that dividend to buy and get those dividends when their books close. So it is helping you instead of, let me pick another one, maybe KCB, which have closed, we click calculate, it doesn't have. Because on book closure for KCB, the payment day is on 11th November. There is no stock which have announced the dividend whose book closure is after 11th November. So it makes it easier for you to even know where to move dividends next. Then below that, you have upcoming dividends. These are dividends which are still active. There's a list. On the mobile, it has a drop down where you can select each and see the dividend they are paying. Then down there, you have the dividends which have already closed, awaiting payment. So if you have shares on these account, dividends on these shares, you just wait on the payment day. You check your M-Pesa or bank. I'm trying to make your work easier through that. Let's go to the other simulator, which now, let me share that link that explains the order entry. For Uganda investors, I think you may be subjected to foreign tax as a foreign investor. So let me skip that. We go to, this is the screen you see on DigiTrader. It has the bids, which are buy orders, ask, sell orders. So the calculator is making your work easier. It tells you what bids are, buy orders, ask, sell orders. These are different orders at different prices. This is just dummy data. If you scroll down, you can pick stock. It tells you which stock, ticker symbol. So stock is the ticker symbol of the company you want to buy. Then you have quantity, is the number of shares you want to buy. It makes it easier for you as a layman to understand. Then order types. It has the different order types you have on the app and portal. We have market. Executes immediately at best price. Maybe it's not visible. Let me expand. At best price, depending on quantity, and may clear more prices. Why? Market order, you're telling the system, go to the market, pick anything that is the market as long as you can fill my order and my funds are enough. So it will clear everything on the on ask side or bid side, depending whether you are buying or selling. So that is the risk nature of market order, but it will execute immediately. Now for the limit, it tells you execute the specified price, the price that you put here, or better if the price selected is not the best. Why? Like now, let's say I want to buy and I put 105. That is the selling price. I want to buy at 105. There is already a best price, 103. So it will first execute 103, then the next one, 105. That's why it's very important to understand the prices. However, if I put 103, it is the current selling price. As a buyer, I will get the shares immediately. 101, 199, I will be queued. And that's where pending order comes in, which blocks your FUD in pending order tab, but we have not debited because the order have not executed. You either amend the price to match the ask or you cancel the order. Hopefully now it's clear. Those two are on the app. Then we have market to limit. This says, go to the market, pick the best price, 103. If my order is 1,000 quantity, first pick the 400. The balance of 600, don't cancel. Remember for market, if you don't fill, it is cancelled. For market to limit, the balance, convert it to the bid side top 103, 600 shares. Then for limit, we have time in force, which is validity on your side. It is the duration the order remains active. Day order, it remains for the active trading session. It expires at the end of the day. Good till date, you select the date. The date you select, your order will be in the market for those days until it expires, you cancel or executes. Again, it expires because the price maybe is outside. You cancel manually or executes. Either the price goes down or you amend the order. So GTD, good till date. Then we have FOK. This is on the portal. Fill or kill. What that means, go into the market. I've submitted an order for 400 to buy. Fill it quickly at 103 or cancel because I will have quoted the price. Or cancel the order. Don't even try to execute small quantity. So if I had 1,000, I'm buying at 103, it will be cancelled because it can't fill. If it is 200, it will execute immediately because 400 can fill my 200. Then there is IOC, immediate or cancel. When I submit, execute what is there. The balance just cancel. So if it is 1,000, it will pick the 400. 600, instead of converting, it is cancelled. Why would you need that? Fill or kill? You want to get the exact quantity that is there. You don't want the order to be there the whole day. Maybe you want to pick quickly, you continue working. Immediate or cancel, you want to pick what is there and continue working without any order that is troubling you. So that is a simulation for order entry. So let me pick the last questions, then we can call it a day. I'm looking for list of dividend stocks. Let me share that link again. It's there on that blog, but let me share again. It's NSC training, the link for NSC training. Let me share the spreadsheet link directly with you. You can make a copy. You go to file menu, make a copy. You'll have a copy of that. Those are the stocks that give dividend and when they usually give dividends, so that you can position yourself. Like now, BKG will give around November, December. Then we have INM. They might give an interim. Kengen, Kenya Power, they usually announce October, November. Then East Africa Potrads and Kabaseed. Those are the most stocks you might expect to give dividend around that period. And now in January, do we have one? BAT, January, February. Then we have East Africa Breweries, Kenya Power, if they give interim. Safaricom is around February. Then the most of them is around March, April. So with that, you can position yourself, maybe time that you feel is good for you. Let me pick the last questions. And hopefully I didn't take much of your time. You know, these sessions and those videos, there is no way I'm repeating these trainings. So you can go and reference on those videos to learn more. I'm Uganda interested in investing money market fund, stock market and boards. Where and how can I participate and invest? For money market fund, reach out on my WhatsApp. I have a contact from Britam. You can talk to. She can explain all the details. Just shoot a message on WhatsApp. She'll call you back and ask as many questions as you can. Ask for a presentation. She'll present to you. Ask as many questions as you can to understand money market fund and other insurance savings plan products. Understand them. Then onboarding, I think I saw it's automated. For stocks, just go to. For Uganda, you may need to fill in manual forms. Just go to our website. At the downloads, you download the individual account opening form, both CDSE and AIB access form. Fill in, send via email to us, we will open. It is the same account you use for boards. So if you want to invest on boards, reach out on WhatsApp. I will connect you with a boards dealing team. They will advise you how to open a CBK CDS account. Because that you need to do it yourself. They will guide you. Once you are done, they can help you buy boards on the secondary market. Secondary market are boards after they are listed. Now people want to get out of that loan they gave to government, they can sell to you. Where do I see where my dividends will be deposited? Nico, just reach out on WhatsApp. I'll check on CDSC system. Kaide said the links to the groups. Let me reshare again. It's there on our website, that link. Research. Let me share. Click on that link for research. It has WhatsApp groups. Those are for research related information. Channels are for training. Great insight, thank you. From your experience and knowledge, can one successfully borrow against their stocks from bank? Yes. Yes. Feel free to do that. Not just banks, circles. Just go to your circle or bank, ask them whether they take loans, shares as collateral. When you're going there, make sure you have our portfolio valuation. Get a portfolio valuation from our side, go with it. Let them evaluate and tell you how much you can qualify. What we do, once you get into agreement, there is a letter they will give you, come and give to us. We put yen on your shares so that you can't sell. You'll be seeing them, but you can't sell until you clear loan. Once you clear loan, we lift the yen. Actually, that is the easiest way of taking loan because you still have your shares. Once you clear loan, your shares are still there. They are paying you dividend. Yes, you can. You have done well. Thank you so much. Definitely reaching out to reactivate. Just do that after this. I will get back to you. And come back to the market. There is a lot. Don't panic because of Mumia's everyday and all that. It was that time when the information was not there. Now the information is out. Thank you for great insight about the penny stocks. I had requested to buy at the moment. I was targeting the dividend and maybe capital gains. My portfolio, Dividend Kings, BAT, that's a good one. NCBA, it's a good one. ABSA, yes. INM, they give a good one. Safaricom is a good one. And Kabasid, they give very good. But the market is bullish, so wanted penny stock that is not overrated at the moment. I buy then opt in a few months. The problem is the market is being excited by one share rule. You never know what will happen when people now get to understand the market. The market might go down, but you can try maybe Kina CIC because they also give dividend. When they appreciate in price, maybe that time you can sell. You can also reach out. I connect you to research team. They can give you a recommendation for penny stocks, though we don't like doing that a lot because this market is unpredictable. Should we still buy Kenya Re? As I said, Kenya Re, it was internal management issue. Buy. It has nothing to do with the company operations. Within a few years, they will even appoint another managing director and company continues operating the normal way. I didn't want to discuss that issue. The reason why he was suspended, he came and changed the management, fired some people. Now, when you start firing people who are key to the company, you expect the company to start underperforming. I don't know his intention, but now he's out. Most of those staff members were returned, and the company is operating as if nothing happened. You buy the shares. Rina and the rest, thank you so much. How do we file CDSC account for beginners? If it is opening CDS account, download our app, AIB DigiTrader, AIB DG. Let me get the link from our website. Hopefully this is the last question. And you are free to visit our office. Our office is at General Madhenge, the Premonid. Let me share the link. That is the link to the app. Let me see if I can get the link. And I hope I'm sharing the right thing. I don't share my WhatsApp. Let me stop sharing. Maybe let me share the screenshot. For those who may want to take my number, I might be sharing my WhatsApp. Let me see. There's somebody had shared. Let me see. Where is it? To the office, so that if you want to come, you can come working days. Let me see. What was her name? Okay. Let me pick the link. Hopefully I can get it. Google Maps. Let me copy the link. Because you need to know where your broker is. Don't just invest. That map, that is the building we are in, the promenade. You come to Westlands, Ring Road, Teremuka to Oshwa, pass, come up to the roundabout between Ring Road and General Madhege, turn left. That's where we are. Do we have any other question? Can buying KPOC at this time good time? Yes, continue buying. Remember, they might issue a dividend. You don't want to be locked in. No? Even if the market is up, it's also the time to buy. You never know, the market can continue going up. Huh? When can you show us how to use the app? Next Wednesday. Next Wednesday, we are doing app together with Data Market Watch, so that whatever stocks we will pick from Data Watch, I will actually buy as my own shares. Huh? Thank you so much for the wrong. I feared investing stocks because people say you can lose your money, but teaching are an eye opener. You can lose money if you follow information on social media. Sometimes is misleading, huh? And also if you are quick to panic and sell. But that's why we started this training, to make sure now you start thinking investment as a long term. Huh? I don't know if you talked about it, was locked out for a while. How can one start making the purchase of stocks? You just go to the app, you can execute a trade. If you have never traded, you can reach out on my WhatsApp, I can take you through. But next Wednesday, God willing, now we go through the whole training. Huh? Thank you so much, Edwina. Much appreciated. Sorry, got a call and didn't hear the response on Kenya Re. It's a good buy. Kenya Re, I said the issue was on management. Huh? where the managing director, CEO, decided to fire people and restructure, moving people from one department to another. That the board may have seen as a catalyst of Kenyari maybe collapsing. You know, when you start moving key people, you start firing, then company is affected. They decided to suspend him. That suspension needs to be announced at NSE. It created panic. People wanted to sell, prices ramped down. Now he's fired. He's suspended, sorry. They have appointed acting. Once his suspension is completed and they have a replacement, company will continue normally. Even the acting one, the company is continuing normally. Most people who had been retrenched, they are back. Those who had been deployed, they are back to their station. So it's time to buy. Actually, those people who bought that time, I know now they are smiling. Huh? They're only waiting for T+3 to start selling to you. It's time to buy. How shall we get to join, link to join Wednesday? Just follow any of the Telegram group. Join Telegram group, Telegram channel for AIB. Join my training channels. And also I will add the link for the community. That's where I will share everything. Yeah? And I think with that, it's the best time to call it a day. I think you have learned a lot. Hopefully the time was worth. Thank you so much. Let's meet next time. And if you have any question, feel free to reach out on my WhatsApp. Huh? And I hope you have learned something. Huh? I'll give you 5 minutes as you drop to pick my number. For those who maybe were following up on the training, but didn't have time to pick the questions. Huh? Thank you so much. And let's meet Friday now for international markets. And all trainings, including calling me, coming to office, to visit our office, are free. Visit, learn the market, invest with information. Thank you. Have a nice afternoon.